Yes, guys, happy morning. How are you all? Fine. Super. So, guys, yesterday we discussed few things. Let's just quickly revise and then go on to today's discussion. Right. So, yesterday's discussion, where did we start? Section? Yeah, 50C was over, then advance money forfeited. So, any advance money which is forfeited, what is the treatment, guys? Before 1/4/2014, any advance money forfeited will be subtracted from cost of acquisition. After 1st April 2014, any advance will be treated as income from other sources. Perfect. So that before 1/4/2014, very rarely you will get the waste. Anyway, otherwise, if gift is not a transfer, we've seen. So if one person gifts it to the other person and that person sells it off, everything flows from the previous owner. Advance money forfeited by previous owner has to be ignored, which is an illogical point. Then we understood what is not a transfer. First, Hindu undivided family distributing their family assets to members is not a transfer. Then gift, will or inheritance by an individual is not a transfer. By a company, definitely a transfer. ESOP, if I get ESOP, that I will give to others. That is not a, that is actually a transfer, sorry, because FME will be treated as the FAOC. Then holding company giving to 100% subsidiary, provided subsidiary is an Indian company. Then subsidiary giving to 100% holding, provided holding is a Indian company. All that it is taken into account. Apart from that, same we saw amalgamating company transferring a capital asset to amalgamated company. It is definitely not a transfer. Similarly, demerged company transferring to the resulting company, that also is not a transfer, provided all the assets and liabilities must be shifted and shareholders having 75% value should be the shareholders in the new company also. Apart from that, it should be going on a going concern basis and some other conditions are there. Then any shares given to shareholders of these companies also is not a transfer. Anything, even asset also, even shares given to the new shareholders also, it is not a transfer. Conversion of bond, debenture, deposit certificate to shares or debentures of that company is not a transfer. Similarly, preference shares being converted to equity shares of that company, not a transfer. SGB, sovereign gold bonds, redemption issued by RBI, individual SEC, is not a transfer. Reverse mortgage concept, whereby the house is transferred to the bank, that is not a transfer. Understood that? Then a transfer of rupee denominated bonds or government securities by one non-resident to another non-resident outside India is not a transfer. All that we've seen, the benefits, etc. Then we discuss special provision number 4, bonus shares. The bonus shares, bonus acquired before 1/4/2001. Again, one more illogical point. Cost or FMA, whichever is high. So it's absurd, but it's there. And then after 1/4/2001, sorry, after 1/4/2001, that is cost of acquisition is nil. But we also saw something about 31/1/18, which we'll see later. Then right shares. Right shares, you can either sell the right or you can purchase the shares. If you purchase the shares, then the right price will be the cost of acquisition. If you sell the right, then at whatever rate you sell the right, that will be your FEOC. And for the person who is buying the right, for him cost of acquisition will be whatever money he pays for the right plus whatever money he pays for the share from the company. So both will be added and that will be the cost of acquisition. That also we saw. What is the cost of acquisition of right, buying the right? Nil. So if I get 50 rights, I'll buy the rights at 100 rupees, 50 into 100 minus cost of acquisition, nil. Obviously, right shares is given free. In the sense, the right is given free. Right share is not given free. Right is given free because you already have shares of the company. We saw that. Then we solved many problems to understand all these things. And then there is no indexation in case of debentures and bonds, but for capital index bonds and for sovereign gold bonds and all, there is definitely taxation. But anyway, now after 23rd July, for nothing there is indexation. Then the sovereign gold bonds issued by RBI, where the redemption is before 23rd July 2024, for individual and other SSE. For maturity period will be 8 years. For individual, it is on redeeming or maturity. It is not a transfer, hence it is not a capital gain. Whereas redemption before maturity, it is capital gain. Indexation benefit will apply till 23rd July. For other SSEs, definitely you will get indexation before 23rd July. Only for individual on redemption or on maturity, it is not a transfer. Hence, no capital gain due to section 47. Then we saw the concept of slump sale, where the entire undertaking only is sold. So in 50B slump sale, selling the undertaking or segment or division for lump sum payment, that is called that. There, what is it? FVOC, that is FMV as per 11 UAE, minus transfer expenses, then net consideration, less cost of acquisition, which is the net worth. So you have the STCG or LTCG, period of holding, everything will be depending on from when the undertaking was started. What are the assets here? Depreciable assets, WDV as per Income Tax Act, non-depreciable asset, book value. Liability, book value. Ultimately, you will get the net worth. That is what we have to see. We saw those entire problems also, 2 problems we solved, we understood. So for everything, we are doing concept capsule to make us understand everything else. All this we discuss. Now today, special provision 6. So we'll finish off all the special provisions and we'll head to the exemptions. Exemptions we can directly do from the notes. So special provisions and exemptions, once that is over, then the last part only will be the tax rates. That's it, over. Capital gain is done. That's all, right? So exemptions and then tax rates. Tax rates, of course, there's a lot of discussion. What are the tax rates for long term, short term, and then we have to solve the questions and all that. Yes. Right on, guys. Next one, capital gain in case of intangible assets. Capital gain in case of intangible asset. Capital gain in case of intangible asset. So guys, capital gain in case of intangible asset. There was one guy called B.C. Srinivasa Shetty, correct? Karnataka fellow. So that fellow had a goodwill of, let's say, just figure I'll just randomly tell, 2 crore. He had a goodwill of 2 crore. He sold off that goodwill for 2 crore basically. When he is calculating the capital gain, FVOC will be how much? 2 crore. Less cost of acquisition. Tell me, what is the cost of acquisition of self-generated goodwill? How do you know? Nil. Just asking. What is the cost of acquisition of self-generated goodwill? Assessing officer, like you said, nil. Srinivasa Shetty was very smart. He said, sir, self-generated goodwill, you need a lot of time to get that name. That involves a lot of cost. Correct? So if you want to get a brand name, you need to spend a lot of time. You need to capture the trust of the people. So with great difficulty, I have got this brand name for myself. It has taken me years of effort. That value is now standing at 2 crore. But the cost of acquisition can never be nil. He said cost of acquisition can be indeterminate. Means what? I don't know how to value. Issue went to Supreme Court. So he is telling full value of consideration 2 crore minus cost is indeterminate. He is telling cost may be more than 2 crore also. I don't know. Or he is telling cost is 2 crore. That is why I am getting the value 2 crore. He is telling bottom line, it is not possible to determine only. Went to Supreme Court. Assessing officer is telling cost of acquisition is nil. As per assessing officer, what is the calculation? 2 crore minus 0, capital gain 2 crore. As per Srinivasa Shetty, what is the calculation? 2 crore minus indeterminate, hence not taxable. I don't know what is so not taxable. Went to Supreme Court. What did the Supreme Court decide? Supreme Court said cost of acquisition of goodwill is indeterminate. 2 crore is fully not taxable. Do you think government will sit quiet? No. They immediately inserted a section. They said cost of acquisition is nil. They changed the law. What did they say? Cost of acquisition of intangible asset is nil. Deemed to be nil. So tomorrow if you sell an asset for 5 crore, what is the cost of acquisition of self-generated goodwill? Nil. Can you tell, no, according to me it's this, that, nothing. Even if you feel it is 5 crore, 6 crore, 7 crore, according to me, cost of acquisition is nil. So, to nullify the judgment of VC Srinivasa Shetty. So, write down within bracket, capital gain in case of intangible asset, within bracket, to nullify the judgment of, nullify means make it zero. To nullify the judgment of VC Srinivasa Shetty. VC Srinivasa Shetty. Section 55 was inserted many years ago, 20, 30 years ago. Not 20, more than 30 years ago. To, what did I say? Nullify the Supreme Court judgment of VC Srinivasa Shetty. SC judgment, Supreme Court. Section 55 was inserted. Section 55 was inserted. For self-generated. So write down, guys. In case of, I'll dictate, write down. In case of. So section 55 gave an entire list. In case of. First one, goodwill of business / profession. Goodwill of business / profession. Second one, trademark brand name. Trademark brand name. Third one, right to manufacture, produce, process. Right to manufacture, comma, produce, comma, process. An article or a thing. Right to manufacture, produce, process, article or a thing. Fourth one, right to carry on business or profession. Right to carry on business, profession, that is license. Is licensing. For example, mining license. No, mining license, you should take mining license, all those things. That is a right. Right to manufacture also, an article or a thing. Basically, if you are a franchisee, let's say I am selling Corner House ice cream, do you know? I can take franchisee of Corner House ice cream. So there I will now get a right to process, produce Corner House ice creams and sell it. All these are examples of what? Intangible asset. Franchisee is also intangible. No, I am using the brand name. Next, fifth one, tenancy rights. Tenancy rights. This is like long-term lease and all. If I give, I have a lot of land, I give 20-year lease, 30-year lease, 10-year lease. That other person will obtain something called tenancy rights. Right to be a tenant. That also is a right to use my property. It's a brand name. Yes, that is also, for all these things, government only decided the cost of acquisition. Sixth one, loom hours. Loom hours. In textile business, if I want to use the textile machinery, that entire textile business happens through something called loom. That entire chakra will be there, no? That is called loom. So the number of hours that you use, which basically the machinery that you are using, it is called loom hours. Machinery in a textile business, using the machinery in a textile business is called loom hours. Seventh one, route permits. Government of India gives an intangible asset called route permit for certain buses, lorries to go on that particular route for business. You have to take a permit. Randomly you can't go. So that route permit also is an intangible asset. Guys, for all these things, cost of acquisition is nil if it is a self-generated asset. Cost of acquisition is nil if it is a self-generated asset. Guys, what if I purchase it? If I purchase the corner house franchise for 50 lakhs, what is my cost of acquisition? 50 lakhs. If it is purchased, then purchase price. If I purchase it, then purchase price for sure. Cost of acquisition nil, self-generated asset, purchase price. Now FMV as on 1/4/2001, benefit is not available. Benefit of 1/4/2001 FMV is not available. Guys, if what does it mean? I had purchased an intangible asset in 1990. If I purchased thing in 1990 for 1 crore, FMV as on 2001 will be 5 crore. Is it 1 crore, 5 crore, whichever is high, or 1 crore only I should take? I had purchased some asset, that is some intangible asset in 1990 for 1 crore. On 1st April 2001, that 1 crore has become 2 crore. Tomorrow when I am selling that asset for 10 crore minus cost, should I take 1 crore or 2 crore? 1 crore. That's what they are trying to tell. FMV benefit not available. FMV benefit not available. So example, cost of acquisition 1990, 1 crore. 1/4/2001 FMV 2 crore. 2024 selling it for selling price 10 crore. So cost of acquisition is to 1 crore or 2 crore, whichever is higher. Benefit only is not available, guys. What should I take? 1 crore. Specifically, they have told benefit not available. Next, indexation benefit available or what? Yes, available for purchased asset till 23rd July 24. Indexation benefit 23rd July 24 available. Indexation benefit on a purchase asset available. Till which year? 23rd July. After that, there's no indexation. Already told you. Absolutely no indexation after 23rd July. You removed. Got it? This is cost of acquisition, guys. Guys, what of cost of improvement? Can you improve goodwill? Is there anything called cost of improvement of goodwill? No. How can you improve something that you have purchased? Goodwill, not possible. So, write down cost of improvement. Goodwill, patent, copyright, right to carry on business or profession, always nil. In the exam, if they ask you some cost of improvement, take it as nil always. Other assets. For other assets, before 1/4/2001, not available. After 1/4/2001, available. That is for what? Capital expenditure on or after 1/4/2001, available. Copy down. Cost of, guys, are you understanding logically? Goodwill, patent, all, what improvement it will be there? Nothing. Only acquisition, that's all. But other assets like LUMAS, route permit, of course, if there is one lorry permission, you can buy one more route permit. That is improvement. You can add an extra route to your entire thing. That's all improvement. That will be available after 1/4/2001. Got it, guys? Easy. That's all. So, very simple. Self-generated goodwill, nil. Self-generated assets and all these assets, self-generated, nil. Makes a lot of sense. This is to nullify which judgment? BC Srinivasa Shetty. But if you purchase the goodwill, then obviously, then you can obviously take the, that will not be nil. I have paid money, no? So for that, it will be purchase price. That's all. Special provision number 6. Like that, some more are there, and then we can directly dive into the exemptions. Lastly, tax rate. That's all. Capital gain only over. Special provision number 7. Write down, guys. 50 CA. 50 CA. Special provision number 7. 50 CA. Capital gain in case of unquoted shares. Unquoted means what? Unlisted. Or even though it is listed, it is not traded regularly in the market. So, capital gain in case of unquoted shares. Now, write down what are unquoted shares. Shares which are not listed, or shares which are listed but not traded regularly, which means that company is not working anymore. It's simply listed. They are called as penny stocks. Legal language, it is called penny stocks. Not legal, technical language. Called penny stocks. Means what? It is listed in the stock exchange but not at all traded, which means company is almost gone. Capital gain in case of unquoted shares. Unquoted means what? Shares are not listed, listed but not traded regularly. Penny stocks. Done. So for these things, what is it, guys? If share value is less than FMB, what were they doing now? When they're making the share value only basically less than FMB. So in that case, you are cheating. How? By making the valuation. This is all based on share valuation. So here, what did I do? If I used to sell the shares, FMB of the shares used to be 500, but I used to sell the shares at 100, 200. Remaining, I should do black money. 200 rupees I'll sell it for in white, 300 I'll pay through black money. But the actual FMB was how much? 500. I say anybody will this buy it at less than FMB? No. FMB is 500. You are paying 200 through bank account. 300 you are paying cash. All that they were doing just because it is not a listed share. So what did the company do? What did the lawmaker do? They said if share value is less than FMB, what is the share value? 200. Less than FMB, 500. And what will be the FEOC? FMB. Because I will assume that you have paid black money. Got it? So write down. If share value is less than FMB of the share, FEOC is equal to FMB. FEOC means what? Full value of consideration. Right? For example, understood, guys? Example take C. Law Limited sold 1000 shares to PJ. Cost of acquisition is 75,000 rupees. Write down. In 2008, 2009, Law Limited paid PJ, sold to PJ 1000 shares. Law Limited sold to PJ 1000 shares. Cost of acquisition is 75,000 rupees. Cost of acquisition 75,000 rupees. Next, in the year 22-23, which problem was that one yesterday where we took wrong indexation? Yesterday one problem, just make one change, guys, because the question had 2001, 2002, 2003, but we took 100. Correct, no? So either you change 18. 18th problem. Correct? So it was some 2000 to 2000. Everybody will be like, I told this stupid fellow made mistake yesterday. Correct. You should have told me, no? Only he told me. There only you should tell me, because I didn't see the question. My bad. Correct? Correct, no? Everyone got it? Question number 18. The question said 2000 to 2003. But we have taken at 1 and 2. And we have taken 100. So you either change the question to 1 and 2 or change the indexation there. Indexation of 2000 to 2003 will be 105. Correct, no? To make that change. Question number 18, that we have taken divided by 100. If you want to make it divided by 100, change the question to 2001, 2002. But if the question remains 2000 to 2003, it's okay. Take it 105. Question number 18. I changed it to 1 and 2. I told. If I told, then fine. If I asked to change the question to 0102, Because what has happened is, in some cases, by mistake, our team has made it 2002, 2003. It should always be 2001, 2002 only. Really, that only they'll give. FMV as on 1/4/2001. Anyway, in the exam, don't write change question and all that. Correct? Questions will be correct only in the exam. You should write as per that. You write whatever you want and then say, assume the question is changed. No. They'll tell, assume you are a CA. Come again. Right. So, Sheela Limited sold the shares. When you have any doubt like that in the class only, you please ask and close it. Because sometimes, definitely, I make mistakes for sure in the class happens. So, you need to tell me then and there, we'll rectify. Later, you'll be like, what is this fellow teaching? All wrong things, that will all come. So that should not be the case. Obviously, we are all human beings, mistakes will happen. So the thing is, I have done those mistakes and I have already passed. If you do those mistakes, again you have to write. That's why I am saying these small errors. But yeah, I changed the question, I also remember, but for which one I changed, I don't remember. So if this was the one where I changed, good. Otherwise, you change the indexation to 105. Calculation will change, that's all, nothing else. Right, guys. So there will be no mistakes in the concept and all for sure, but problems here and there sometimes. The question will be different, answer will be slightly here and there, it happens. Very rarely, but if it happens, please immediately tell me so that we will rectify. Now I remembered because I saw this indexation. So then and there, you should tell, sir, it is 2002, 2003, should it not be 105? Simple. Yes, so Sheela Limited transferred 1000 shares to PJ. What is the cost of acquisition? 75,000. In 2022-23, in 22-23, PJ sold it at 100 rupees. That's all. PJ sold it at 100 rupees. But guys, the FMV was 400. What did I do? I sold it at 100, cash 300 I gave. Cheating. To avoid tax, I did this. For unquoted shares, you can do all these things. Right? The cash is how much? 300. So FMV is greater than selling price. When FMV is greater than selling price, then FMV is equal to FVOC. Right? So FVOC, how much guys? 1000 into 400 it will be. 4 lakh. 1000 into 400. It is not 100. 1000 into 400 you should take. Less cost of acquisition will be how much? 75,000 was the cost way back in 2008-2009. Into 331 by 137. Why 137? 137 is the cost inflation index for 2008-2009. And 331 is the cost inflation index for 2022-23. So 75,000 into 331 by 137 will become 1,81,204. So what is the capital gain? 2,18,796. If this was sold after 23rd July, no indexation. Or no? Yes, if it is sold after 23rd July 2024, there is no index. Absolutely no indexation, fully removed after 23rd July, except for one thing, house. That too, family property, old property, for that only there is a choice. You can either do without indexation into 12.5% tax rate, with indexation 20% tax rate. It is only for house property. That too residential house property, and that too only by individual. For everybody else, the concept of taxation has been removed fully. So whatever I am doing, it is only before 23rd July. After 23rd July, this calculation will not come. Only I should take how much? 4 lakh minus 75,000. It becomes more easy for me. 4 lakh minus 75,000. No indexation. So indexation has reduced to a large extent. Next one, guys. Special provision number 8. Section 50 capital D. This one we did was 50 CA. Which one? 7. 50 CA. Whereas special provision number 8 is 50 D. Where the consideration is indeterminate. Where the consideration is indeterminate. So guys, very simple. What is this? What is this? I'll explain, then we can write down. So I will give you an asset worth 1 crore, and in return I'll ask you for favors. I'll transfer an asset worth 1 crore to you, and in return I'll say you need to give me business. Whenever any clients come to you, you need to refer some to me. This will be a deal for the next 5 years. I don't know how many clients you will refer. That value may be 5 crore, 6 crore, 1 crore, 50 lakhs also, I don't know. Now in this case, there is quid pro quo. I am giving you something, you are giving me something. I am giving you asset, you are giving me benefit. How will I determine FEOC? This is a problem. Correct. Second one, I give you an asset worth 1 crore, you will give me an asset worth 1.2 crore. So my FEOC is 1 crore or 1.2 crore? There's one more problem. Correct. I am giving you my building worth 1 crore. In return, I am getting share worth 1.2 crore. So I'm actually selling my building for 1 crore. In return, I am receiving share for 1.2 crore. What is it? Is it my FEOC is 1 crore or 1.2 crore? That is a problem, right? So that is why this section has come. Which one? 50D. So 50D talks about that only. What will be the consideration? Write down. When an asset is exchanged for another asset, an asset is exchanged for another asset and consideration is not determinable, consideration is not determinable. FEOC is equal to, what did I say? When an asset is exchanged for another asset and consideration is not determinable, means I don't know how much to determine. So FEOC is equal to FMV of the asset transferred. FMV of the asset transferred. Guys, if I give you an asset worth 1 crore, then ask for your clients for the next 4 years, what will be my FEOC? FMV of the asset transferred. FMV is 1 crore. But what if it's an exchange then? that example I gave you, I will give you asset worth 1 crore. Anyway, for this now you write an example. For this you write an example, exchange will come to that. So example, Mr. or Miss, your name. Mr. or Miss, your name transfers a building of FMV 1 crore. Mr. or Miss, your name you write. Mr. or Miss, your name transfers a building worth 1 crore. Transfers a building to of Mr. of how much? Rupees 1 crore to Mr. B. To Mr. B. With an understanding that Mr. B has to refer clients for the next 4 years. Next. Here, what will be the FEOC? FEOC is equal to FMV of asset transferred, that is equal to 1 crore. FEOC is equal to FMV of asset transferred, which is equal to 1 crore. Next, if Mr. A transfers building of FMV 1 crore, Mr. A, if Mr. A transfers building, Mr. A transfers building of FMV 1 crore, transfers building of FMV crore to Mr. B. Mr. B gets shares from Mr. B. Gets shares from Mr. B worth 1.2 crore. Now guys, tell me, for Mr. A, what is the FEOC? For Mr. B, what is the FEOC? Lawmaker says FEOC is equal to FMV of the asset received in return. Write down, FEOC is equal to FMV of the asset received in return. Equal to FMV of asset received in return. What will it be? For Mr. A, FEOC is equal to 1.2 crore. For Mr. A, FEOC is equal to 1.2 crore. For Mr. B, FEOC is equal to 1 crore. regarding TD. Consideration is indeterminate. Next. Special provision number 9. Write down special provision number 9. Provision number 9. That is first proviso to section 48. First proviso to section 48. First proviso, section number and all not needed, guys. First proviso in the section. Write down capital gain in case of shares and debentures. Capital gain case of shares and debentures. Capital gain in case of shares and debentures transferred by non-resident. Transferred by non-resident. Guys, what is it? I'll explain, then you can copy, check it out. What used to happen, problem I will tell you. See this chart, you will understand, then I allow you time to copy, just blindly. See guys, a US resident used to wanted to invest $1 lakh in India. $1 lakh. $1 is 70 rupees. How much is he pumping in? 70 lakh rupees he is pumping in. So he will come, put $1 lakh, go to the bank, exchange it for 70 lakh, and 70 lakh he'll invest in. What will he do with 70 lakh? He will buy 10,000 shares of 700 each. Has he become a shareholder? Yes. Just to tell you. Third point, later, after some time, he sold 10,000 shares at 800 rupees. Will become how much? 80 lakh rupees. What is the capital gain? 10 lakh. All that is okay. But at the time of sale, no, unfortunately, $1 has become 85 rupees. So when he's taking money outside the country, what is the gain that he has got? 10 lakh. But he wants to convert to dollar. What has happened? 10 lakh, 80 lakh is what he got, no? Ultimate sale price. So 80 lakh divided by 85. Why? He bought it at 70, but is extracting back to USA, it has become 85. So 80 lakh divided by 85, how much is he getting? $94,118. Very sad to know, he invested $1 lakh, got a capital gain of 10 lakh, but still when he is withdrawing money, how much it has become? 94,118. This non-resident, first of all, there is an outflow investment of $1 lakh. In return, how much is he getting? 94,118. What is the loss already? 5882. Why did the loss come? Because of exchange rate fluctuation. Apart from that, in India, he has to pay tax on 10 lakh also. Capital gain. Sane investor, will he invest in India? He'll run away. If I don't protect exchange rate fluctuation like this, I'll run away. So should I actually invest in dollars or should I convert to rupee? If I convert to rupee, this is what's going to happen, no? So the investors went and told, sir, give me a chance to invest in dollars only, make the profit in dollars, loss in dollars, and then you allow me to convert. That is the risk I'm willing to take. But just because of exchange rate fluctuation, when I pumped in money, it is 70, and I'm withdrawing, it is 85. Why will I create this loss? That is why, do you understand the logic? That's why they inserted this section as a first proviso to section 48. Said, what did they say? Said, convert everything to first do all the transactions in dollars only, but convert it into the average rate so that there is no no loss or profit. There is no fluctuation like this. So what did they say? Calculate the FEOC. FEOC will be the average rate as on the date of transfer, which means on the day that you are transferring, that you are selling the shares. In my example, they sold the shares for how much? 800 rupees. They are saying don't take the 800 rupees here, take the average rate on date of transfer. So average rate, everything you should do it in dollars. Everything do it in dollars, is saying. Then later you convert. Correct? No. Instead of converting everything into rupees, convert everything to dollars. And then in the end only convert to rupees. Then only it makes sense. Because you have dollars, you start using the dollars. Instead of converting that 1 lakh into 70, you just invest $1 lakh directly. Calculation purposes, take $1 lakh only. So FEOC will be on the average rate on the date of transfer. What is average rate? Rate will be something called TTBR, TTSR. Telegraphic transfer buying rate, telegraphic transfer selling rate. This is the rate as per RBI. RBI will give a buying rate, the rate at which they buy the dollar. RBI means all the banks. Banks will buy dollar at one rate, sell dollar at one more rate, no? So when I say TTBR, it is called telegraphic transfer buying rate. Buying rate by the bank or buying rate by the, SSE? Buying rate always by the bank. At what rate I am going to buy the asset? TTSR is what? Telegraphic transfer selling rate. The rate at which the bank is ready to sell the dollars. So FEOC is equal to average rate on the date of transfer. Yes, transfer expense also you should take average rate on the date of transfer. When you do a sum, you will understand. Then you will get net consideration. Cost of acquisition, I will not get any indexation benefit because I am taking everything at the market rate. Average rate is nothing but market rate. Then finally, whatever I get short term or long term, only in the end you convert to INR. Rather than converting into INR every single time, what are they saying? Convert only in the end. In my example, that 10 lakhs gain I will get, no, only that time you convert. $1 lakh you invest, and whatever you get in return, if there is a gain, $2,000 gain, $3,000 gain, that you convert to INR so that there is no loss for you. Are you understanding, guys? Logic? So finally, the short term or long term which you get in foreign currency, that you convert into INR by taking what rate? TTBR, telegraphic transfer buying rate on the date of transfer. Everywhere it's average rate, guys. Average rate, average rate. Only last part, when I'm selling, that is telegraphic transfer buying rate. This is the rate at which the bank will buy your dollars. That's why I'm converting. No, they'll buy dollars and give you INR. The logic. Telegraphic transfer buying rate on the date of transfer. Average rate is what? TTBR plus TTSR divided by 2. Got it? When we solve a sum, you'll understand. But did you understand the logic? So rather than converting at every step of the way, take it in dollars only. In the end, you convert. Yes. So after you copy down, we will solve a sum so that you'll understand the practical application of it. So this you write down. This used to be the problem, guys. Down. This used to be the problem. For 5, right? Then I'll scroll down. This was the problem always. Problem has been rectified now by first proviso to section 48. Are we done, guys? Copying still? Copy, copy. So we have to solve a sum, only then you'll understand. The logic is very simple. Rather than converting to INR from the beginning, use it in dollars only the final loss or profit convert, so that you will not miss out on the, what do you say, currency fluctuations. You will not miss out simply because of currency fluctuations. I invested 1 lakh. First of all, there was a gain of 10 lakh, but the problem is I lost dollars because of the exchange rate fluctuation. That will not happen. So FVOC will be average rate, transfer expense will be average rate, cost of acquisition, there is no indexation benefit, short term, long term in foreign currency, convert into INR, TTBR on date of transfer, yes. Average rate TTBR plus TTSR divided by 2, dollar or any other foreign currency. Here. Concept capsule 14. Capital gain in transfer of shares or debentures by non-resident. The Benedict, non-resident Indian, acquired in February 2013 debentures in Indian companies for a consideration of 20.5 lakhs by remitting equivalent dollars. In October 24, he sold the debentures for 53 lakhs after incurring 66,000 towards expense for transfer. Or inform the details of telegraphic transfer. See, on the date of acquisition, on the date of transfer. You should do it on date of acquisition or transfer. Yes, date of transfer. You should not use the buying rate. You should do this one. 74.5 plus 74.75 divided by 2. It is not on acquisition. It is always on transfer. If I take on acquisition, it will be like my actual example only, no? Into 70, then it became 80. Then what's the point? It should be always, everything is to the date of transfer. So there is actually no loss with respect to currency fluctuation. Logic understood? So now you see the sum. Average rate will be TTBR, TTSR, 74. I'll explain the new copy. 74.5 plus 74% divided by 2. What is the average rate? 74.625. Average rate on the date of acquisition is how much? 40.5 plus 41.5 by 2, 41. So you'll write later. Now sale consideration, FVOC, how much, guys? They bought it for how much? 53 lakh. Sorry, they sold it for how much? 53 lakh given in the sum. Check it out. Sold it for 53 lakh. So 53 lakh FVOC will be how much? Divided by 70, average rate, $71,022. Expenses on transfer also should be average rate. 66,000 by 74.625, $884. What is the net consideration? 70,138. Cost of acquisition obviously should be on the date of acquisition. So 20 lakh 50 I bought it for. Average rate is 41 rupees. The date of acquisition $50,000. So what is the capital gain assessable? $20,138. And this I have to convert based on the TTBR on transfer, not average rate. TTBR. What is TTBR? 74.5. So 20,138 into 74.5 will be how much? 15 lakh 281. 15 lakh 281. Got it, guys? All of you? Copy. Wait, I'll just show this first, average rate, then I will scroll down. Question number 30. Done? Cool. That's all, guys. This is all the special provisions. Now we can go to the notes only. Read, because I've made it very nice there. It's easier for you to understand there only. This one, exemption. Page number 8.35. No point copying the same because I've made it. In the notes, you can say exemptions, check page 8.35 onwards. Because I've made it in a very concise way here only. No need to write again, same thing. This much only we can study. Exemptions, section 54 to 54F. What do you mean by exemption? So once you compute the capital gain, you will have to pay tax on that. Right? Once you pay capital gain, once you do, you have to pay tax on that. Tax on that capital gain. Before what do you say? Imposing tax, you should subtract something called as exemption. The exemption is like a benefit given to you. The government is very, clear on this. If you sell a house and make some money, don't waste that money. Buy one more house. Sell one house, buy one house. Or sell one house and invest in something else. So that entire capital gain that you make is fully exempt. You don't have to pay any tax. So in order to promote savings, rather than wasting that money, government has introduced this concept of exemptions. Starts with section 54. First one. And this will directly, they will not ask in the exam. It will be forming part of your questions. You only need to figure out whether exemption will come or not, because they will just say the person sold a house, he wanted to buy one more house, he bought one house within 2 years. Or then you need to see, okay, within 2 years if you buy, will you get or not? So this entire exemption we only need to figure out. Okay, so one by one. Exemption for residential house property. So section 54 talks about residential house property. Eligible SSE, individual or HUF. So guys, company and all, if it sells, can company own a house? Yes, but if company sells a house, is there any exemption? No. Individual HUF should be selling a house. Next, what is the asset transferred? Residential house property. Next question, you are an individual. You have a house property in Bangalore. You sell it. Will you get exemption? Yes. If you do something else, you will get exemption. What you should do? And is it a long-term gain or short-term gain? Should be long-term gain, which means it should be more than 2 years. You sell a house today, tomorrow you buy a house. Then that house also you will sell immediately. Buy one more house. Will you get exemption? No. Otherwise, people will do this only, no? Buying and selling of house, trading they'll do. Many people do this actually. They buy a house, immediately next month they'll sell. 1 year later they'll sell short term. So no, it should be long term. And what should you buy? You are selling a house, buying a house. Then you will get exemption. You sell a house for 3 crore. 3 crore minus cost, capital gain is 1 crore. This 1 crore that you got, no, you will invest in one more house. Do you have to pay any tax on 1 crore? No. Now my question to you is, I sell my house in Bangalore, buy a house in USA, will I get exemption? Why? Yes, you should purchase residential house in India only. Ulta question. I'm an Indian living in India. I used to live in USA many years ago. I had given that house on rent. Today I sell my house in USA and buy a house in Bangalore. Do you think exempt or not exempt? Exempt. Here, residential house property. Have they given in India? No. Correct? So I can sell my house in Bangalore And if I buy a house in USA, no exemption. I sell my house in USA, buy a house in Bangalore, possible. Mind you, it should be long-term capital gain. So what is the first of all? Individual. Second of all, house property anywhere in the world. Third one, long-term capital gain. Fourth one, buying a house in India. Next question, should I buy or should I construct? Where did I tell? I chumma told buy. Where is it buy? Acquire can be construction also, no? Yes, guys, it can be construction also. You see, timeline they have given. I can't buy 5 years later and claim exemption. I should purchase a new house within 1 year before or 2 years after the date of transfer. Guys, old house I have never sold. Can I buy a new house before that only? Yes. I'll have extra money, I will use it. No problem. So, the current house in Bangalore I want to sell in 2025. But in 2024 only I have bought a new house. Once I sell this, can I use this as an exemption? Yes. 1 year before or 2 years after. If I am selling this in 2025, within 2027, buy one more house. What about construction? For construction, they have given 3 years, guys. Construction cannot be made before you sell the house only. Can you construct another house before selling the old house? No. But can you start the construction? Yes. Completion of construction should be within 3 years from the date of transfer. So you are selling the old house. 1 year before selling the old house, if you have already bought another new house, you will get the exemption for the new house if you sell the old house today. Or once you sell the old house today, using that money only, you can buy a new house within 2 years. Sir, I don't want to buy, I want to construct. Okay, construct a house within 3 years. Now the question is, until that 1 year, 2 year or 3 years, where will you keep the money? In your bank account you will keep? Will you keep in your bank account? You will say, my bank account only I will keep. Nirmala madam says, I won't trust you. Because you are getting an exemption. See, think about it practically. Today I am selling a house. I am filing the return today. And I am going to claim exemption today. Nirmala aunty will come and tell, how come you are claiming exemption? I'll say, madam, I am constructing the house or I am buying the house within 2 years. He'll say, what is the guarantee? Where is the money? See, madam, bank statement. I sold this house for 3 crore rupees. I had bought it for many long time ago. So the capital gain is around 1.5 crore, but in the bank account 3 crore is there. Sale consideration. Cost is already paid, no, some other day. For calculation purposes, what is my capital gain? 1.5 crore. But what is the sale consideration? 3 crore. How much money is there in the bank account? 3 crore. And today I am telling the capital gain of 1.5 crore, I am going to invest in one more new house. You only invest the capital gain. Madam, I am buying one more house for 4 crore actually. I had 1 more crore separately. Plus this 3 crore also I will put. At full 1.5 crore capital gain, I will not pay tax. Are you understanding? I am going to purchase a new house within 2 years. I have already taken the exemption this year. Nirmala aunty is asking, how are you taking full 1.5 crore exemption? Because I'll say, madam, I promise that in the next 2 years I am going to buy. He'll ask you, where is the money? See my bank account. Then she'll ask one question, what is the guarantee that you will buy? So you will say, your Nirmala aunty promise. Your mother promise, I will buy. Because how will you trust? This is why government came with a scheme. It is called special account you have to open. SBI and many other banks. What is that account called? capital gain account scheme. Money should be lying there for 2 years. How will I trust you otherwise? This year you are claiming exemption or 2 years later? This year. You are promising the government that you will be purchasing within 2 years. But what is the guarantee that you will purchase? You have to lock that money in an account. Which account? Capital gain account scheme. Then only I'll give you exemption, no? If you bought the house, okay. 1 year before you have bought the house, okay. You have not bought only. You are simply promising. Will they agree based on your promise? No way. You have to invest in which account? Capital gain account scheme. That money should be locked in till you buy the house. Can't touch that money. You can only withdraw that money to buy the house. Nirmala aunty says, if you don't follow this rule, whatever exemption you have claimed will be withdrawn. That's all. Today you have done capital gain 1.5 crore. You have transferred that capital gain to which account? Capital gain account scheme account, 1.5 crore. You have promised Nirmala aunty that you will buy within 2 years. Next year, 2 years over, you have not bought. Nirmala aunty will open the returns of 2024. And whatever exemption you have got will now be withdrawn. It will now be taxable in that year. 2027 it will be taxable. Why? You have claimed exemption in 2024. When it will be taxable? 2027. The exemption given earlier will be withdrawn. Right? Yes. So how much capital gain will you get? I mean, how much exemption? Very simple. Cost of the new residential house or the capital gain, whichever is lower. In my example, I sold it for 3 crore. Capital gain was 1.5 crore. I invest in a new house for 2 crore. Is the full capital gain utilized there? Yes. So what is the exemption? 1.5 crore. What if I buy a new house for only 1 crore? How much will I get exemption? 1.5 crore or 1 crore, whichever is less. Which is less? 1 crore. So if you see your example, yes. Capital gain 30 lakhs, cost of new asset 45 lakhs, exemption is 30 lakhs or 45 lakhs, whichever is less. Capital gain 50 lakh, cost of new asset 35 lakh, exemption is 35 lakh, 50 lakh or 35 lakh, whichever is less. Got it? Done? Now guys, let's say I buy a house within 2 years. Fair enough. I get exemption? Yes, because I have transferred to an account called capital gain account scheme. Get an exemption. I buy a house within 2 years. That house can I sell immediately? Condition is also there. Sold an old house. I bought a new house. I've got the exemption already. I got off the exemption, all cool. Next day only I'll sell it. Allowed or not? That new house also, there is a lock-in period. Easy. How much? 3 years. Guys, you should understand the objective. Objective is for genuine middle class people. Have a home. The home, buy a new home, live in the new home. At least for 3 years. Don't use it like an investment method just to keep selling houses. See, house property also shall not be transferred within 3 years from the date of its acquisition. Is transferred before the lock-in period, the exemption claimed earlier shall be withdrawn by reducing the cost of such asset by the amount of capital gain exempted earlier. So what will happen? Same, if you transfer within 3 years, then what will happen? Whatever you got before will be withdrawn. And what did I tell you guys? You should now transfer everything to the capital gain account scheme. When should you file that? Before filing the return of income, or within the due date of filing the return of income. Understood? When? Before 31st July or 31st October. Whenever you file the return, before that you should always transfer to capital gain account scheme. Sorry? No, company no, only individual. Individual and no. Individual it will up to come, no, why not? Those who are into tax audit. That is for normal fellows. If you are into tax audit, then any individual for whom tax audit will apply, for him it will be 31st October. You are having a partnership firm is undergoing tax audit because the turnover is more than 10 crore. When firm only has to go through tax audit, firm's return will be 31st October. What about the partner's return? 31st October. When firm's only is not finalized, how will you file your return? Correct? So it is 31st October. A deposit shall be made in an account with a bank or institution in a scheme notified by central government. Some SBI account it will be. Return shall be accompanied by proof of deposit, guys. Otherwise, you will not get. The amount deposited must be withdrawn for utilization according to this. If it is not, it will be withdrawn. See, for example, capital gain 50 lakhs. Cost of new asset 35 lakhs. How much you have utilized out of CGAS? 25 lakhs you utilized. How much is the capital gain? 50. What is the cost of new asset? 35. 25 lakhs you have utilized. Exemption 35 lakhs you will get, not 50 or 35, whichever is less. You will only get 35 lakhs. But guys, how much have you utilized out of capital gain account scheme? 25. How much you have not utilized? 10. Capital gain was 50, new asset is 35. As we know, 50 or 35, whichever is less, 35. But in this 35, everything should have come from the capital gain account scheme. How much have I used from capital gain account scheme? 25. Remaining 10 definitely will be taxable. Like that you had planned let's say you had planned to invest the full capital gain account. Let's say you had deposited 1.5 crore in the capital gain account. You wanted to buy a new house for 2 crore very soon. Before that you died. Right? Have you already transferred in capital gain account scheme? Yes. Have you already got exemption? Yes. But you died. Money will go to your legal heir. Is it taxable for legal heir? You didn't buy the house, you died. Inheritance is not a transfer, will, etc. But my question is, it is not a transfer, okay. But is the exemption withdrawn? Exemption is for you or your legal heir? Are you understanding, guys? Who got the exemption? You got or your legal heir got? You got. I gave the exemption, you died. Now that money has now gone to legal heir. For legal heir, is it taxable or exempt? This was a doubt. Some people said taxable, some people said no. It went to department. See, CBDT, Central Board of Direct Taxes, has clarified circular 743, 1996 only. In case of individual who dies before the expiry of the stipulated period, means that 3 years, any unutilized amount of deposit made under capital gain account scheme shall not be chargeable to tax in the hands of the legal heir. Or no? Got it, guys? Now, what people were doing now? Be smart. They were selling their house for 20 crore. Capital gain was 15 crore. Then investing in new house for 30 crore. They are already fully loaded. Nirmala madam said this section is only for middle class people. You are actually taking capital gain exemption of 20-30 crore because you are fully loaded. You sell a house for 100 crore, make a capital gain of 60 crore. You invest in one more property of 70 crore, full 60 crore exempt. This section is not for you. This section is for middle class people who have one home or two homes. In that one they are selling, one they are sort of leading a middle class life. Nowadays middle class means at least one house you should have. Little upper middle class, two homes you will have. One you will give it on rent, one you will live. Rich class, three homes they'll have. Three different wives they'll have. Right? Three families. So this is not for you. Like Vijay Mallya, for example, one wife was in Bangalore, one wife was living in Dubai. Not joking. He has two wives. Right? So, like that, now Vijay Mallya sells one property for 150 crore. Capital gain is 100 crore. He buys one more property, 120 crore. Full 100 crore exemption he'll claim. Crazy. So, in the year 2023 or 22, very good amendment came. 8.37, you see, capital gain in excess of 10 crore rupees would not be taken into account for the purpose of deposit in CGS. Maximum capital gain, how much? Exemption, 10 crore. Deemed cost of new asset would be restricted to only 10 crore, guys. So you made a capital gain of 20 crore. You bought a new asset of 30 crore. What is the maximum exemption? 10 crore. That's it. The LTCG 14 crore. Amount incurred by the SSE on construction of new house 7 crore. Maximum deposit in CGAS should be 10 minus 7. 3 crore. That's it. Can't go beyond this. Can you deposit full 14 crore? No. Can only deposit how much? 10. And maximum capital gain also exemption how much? 10. Now the question was, they asked a question, can I sell a house property in USA and buy in India? Yes. My question is, I sold one house property in India only for 2 crore. Can I buy two homes of 1 crore each? This is one residential property. Can I have two residential property? This went to Nirmala aunty again. Saying, Madam, I have had some family property. I sold it for 10 crore. Now 5 crore, sorry. Capital gain is 3 crore. I have 3 crore capital gain. I don't want to buy one more property. I want to buy two. Allowed or not? After a lot of discussion, this happened 15 years only, they allowed. May 2012 was my attempt, no? The attempt was May 2012. I think 2013 or 14 it came, guys. They said, okay, if you sell one property, can you buy one or two? Two. But this option is available only once in the entire lifetime of the SSE. You can't keep doing this. Basically, this was for family property you will have, no? Suddenly you will get it and you will sell it. You will make a lot of money. They are saying, okay, in that case, buy two. The last point here. In case where amount of capital gain does not exceed 2 crore. That was the main condition. Capital gain should not exceed 2 crore. If your capital gain is 2 crore, you can buy two homes, 75 lakhs, 1.2 crore, like that. SSE may, at his option, purchase or construct two residential properties in India only instead of one. Such benefits shall be available only once in the entire lifetime of the SSE. Got it? I can buy how many? 2. So guys, revision. After that we'll take a break. This revision of this section. Mr. Raj, individual or HF, sells residential house property. 1 year before or 2 years after he should purchase a new house, or 3 years after I should construct a new house. Yes, if I cannot construct, till I construct, I will deposit in which account? Capital gain account scheme. Before due date of filing the return, I have to use it for either purchase or construction. And once I construct a new house or buy a new house, that should be locked in for how many years? 3 years. If you don't do all those things, whatever benefit will be withdrawn. Understood? Yes or no? Easy. So in the exam you should see, they'll suddenly give this fellow sold one more house. Then immediately it should strike you. Section 54. If I sold a jewelry and then bought a house, will section 54 come? No. Section 54 is selling a house, buying a house. Got it? Yeah. Cool, guys. Alright, buddies. So let's continue. Exemption we were doing. 54 is done. Moving on to. So what is this 54? In that the maximum capital gain allowed is 10 crore. And if it has gone to legal hair, that money, whatever he has, that is exempt, he can do whatever he wants with that. He can go for a trip because his grandfather died and he got so much money, or he can buy one more house, no problem. Everything is exempt for him because whatever was exempt for his grandfather, great grandfather, it is exempt for him also. Done. So 54 is that. Moving on, 54B. Exemption for urban agricultural land. So section 54B talks about urban agricultural land. Again, eligible SSE is individual or HF. What is the asset transferred? It is an urban land used for agricultural purposes. Used for. Urban land used for agricultural purposes. Did he say he owns it? No. Used for agricultural purposes. When? It must have been used in the 2 years immediately preceding the date of transfer for agricultural purpose, either by individual, including by parents, or HF. So he is selling an asset which he has used for 2 years. Minimum 2 years. Short term or long term? How can it be short term? No, how can it be short term? What is the for removal load? Is it 1 year or 2 years? 2 years. But how can there be a short term capital gain if I have to use it for 2 years then? I hope you are understanding what I am asking. If I have to use it only for 2 years, which means it has to be long term. How can I use it for 3 years and own it for 1 year? Are you understanding? How can short term come? If I am saying you should use it for 2 years, then minimum 2 years. Anything more than 2 years will be long term only. So there can never be short term capital gain. But no, guys, that's why they've used the word used. Many times what happens is people use it for years and then buy it. So I am taking your land on lease for 9 years. Am I using it for 9 years? Yes. At the end of the 9th year, I'll come and tell boss, I'll buy it off. So that you will actually sell it to me. Then can I immediately sell it? Yes. Then it will become short term. So this section is to sell urban land and buy urban or rural land. People from Kerala are very smart. This is what people from Kerala do. Not joking. They'll come to Karnataka and other places, take a land on lease for 5-6 years. They will grow only ginger. Ginger sucks the entire nutrients from the soil. After 5 years, that land becomes, ginger is so tasty, why? Because it has taken all the nutrients from the soil. And ginger is a commodity which you need every single day for cooking. Whether it is sambar, whether it is any North Indian dish, whether it is simple tea, you need ginger. Adrak, it is called in Hindi. Ginger is needed. Shunti in Kannada, right? What is it in Tamil? Inji, yeah. You need that. Obviously, you need it always, right? Yes. So the thing is, these fellows, no, very smart. They will take it on lease for 5 years, suck the entire nutrients from it. Last year, they'll go to him and say, "Sir, we'll buy your property." That fellow will see the land already barren, nothing can be done, he'll sell it off. Then immediately, this Kerala fellows, what they'll do? They'll immediately sell it to somebody else and take exemption also. Under which section? 54B. That is the meaning of using for 2 years. And how is it short term? You owned it only for 6 months. You've been using it for 5 years. Everything matches. So they'll sell that land and buy one more land and get exemption under 54B. Right? You can buy what? One more urban land or rural land. When should you buy it? Within 2 years. 1 year before and all is not there. 3 years is not here. You can just buy a new land within 2 years. Cost of new agricultural land or capital gain, whichever is lower is there. And until you buy for 2 years, where will you keep it? Same, capital gain account scheme. The 10 crore amendment is not applicable for this land, but other things is the same. Capital gain account scheme you will buy. The new land, lock-in period is there. How many years? Same guys, 3 years. There is a lock-in period for the new land. For how many years? 3 years. 3 years lock-in period. Now these Kerala people, damn smart. What they do, they'll first come to you. They'll say, I want to lease the land for 5 years. So they will lease it for 5 years. At the end of the 5th year, they'll buy the land. So have you been using for 2 years? Yes. Are you the owner of the land? Yes. The next 3 months only they'll sell it. Short term gain or long term gain? Short term. With that money that they get, immediately they will purchase a rural agricultural land. They sell an urban land and they'll buy what? Rural agricultural land. Now, this new land, for how long should you lock in? 3 years. But they sell this rural land next year only. And they don't pay capital gain tax. How? What is the exemption? Sell urban land, buy what? Rural or urban. Our Kerala friends will first use the land for 5 years, buy that land, immediately sell it in next 6 months. Short term gain, they will invest it in rural agricultural land. And within 6 months, they will sell that land also. They'll make 3 crore rupees tax free. How? Guys, because rural agricultural land is not at all a capital asset. So that lock-in period will not apply only. Are you understanding? Tax planning. Superb tax planning they do. Rural agricultural land is not a capital asset. This idea, if you give 10,000 rupees, you can make. This simple idea. They will come to you for this only. One thing you realize, chartered accountants, they will not come to you and say, tell me journal entry for this. They will come and tell, give me tax saving ideas using the law itself. Am I breaking the law? No. Using the law. Very smart. Right? That is what it is given here. Read. And then read this chart and let me know if you understood. Read guys. Take 2 minutes, finish it off. Got it, guys? Read. We done? Yes. So that is regarding which one? 54B. 54 is selling house, buying house. 54B, selling urban agricultural land, buying rural or urban agricultural land. Mind you, 54B does not involve selling rural land and buying urban land, because rural land is not at all a capital asset, so it will never come under 54B. Third one. This is compulsory acquisition, guys. Of which land? Industrial land and building, 54D. Government comes and takes over your industrial land and building compulsorily and gives you money. From that money, you should buy another industrial land and building. You will get exemption. That's all. Like relocation. They'll take over, they'll give you money, they'll say, sir, please go elsewhere, we need to construct something here. So you will go somewhere else and buy an industrial land and building. Same thing. See? And this is for all SSEs, not just individuals. Obviously, companies also will be there. No, big companies will have to buy this. Individuals alone cannot do. Land or building or any right in land or building forming part of an industrial undertaking. There must be compulsory acquisition of the asset. Asset must have been used for 2 years immediately preceding the date of transfer. Same like that urban land. What is the nature of capital gain? Short term or long term. For house property, it is always long term. For 54B and 54D, it is both short term and long term. What will I purchase somewhere else? Same industrial land or building. When should I purchase it? Within 3 years. Other things remain the same. Cost of new asset, capital gain account scheme, lock-in period 3 years, everything is the same. No change. Now my question is 3 years from the date of sale or 3 years from receiving the money? Sale means compulsory acquisition. There is no sale here. They have come and taken over my property. Is it 3 years from taken over of property I should buy a new asset, or is it 3 years from they give the money? Guys, if they take over property, do you think government will pay within 3 years? No. It is 3 years from which day? 3 years from the day they give you the money. It's not 3 years from taking over the property. Technically speaking. Though it is given here, see, new asset should be purchased, not this. Yeah, purchase or new asset within 3 years out of the date of transfer. What is date of transfer? Is it compulsory acquisition or is it receipt of money? This went to court. Court, okay, transfer is definitely compulsory acquisition only. But what if I don't get money? Why should I pay from my pocket, take exemption? So they decided that it should be date of what? Compensation receipt. I have done here. Compensation. Understood? Logical, no? Law uses the word date of transfer, but you also know practically date of transfer and date of compensation, at least there will be 1 or 2 years difference. We saw in compensation, no? Interim compensation, initial compensation. I can't sit and put my money. You took away my property. You want me to put my own money and claim exemption for something that you took over. No. It is 3 years from the date of receipt of compensation. But in the exam, what you will write? 3 years from date of transfer only you will write. But in the exam, if they ask you that the compensation was received next year, it should be 3 years from next year, not 3 years from this year. Got it, guys? Read now. Read this. This chart is like revision. Check it out. All easy, guys. Very simple. Same lock in. Everything is the same. One, if you study, other things will become very easy. Any doubts? So we studied 54, 54B, 54D. 54 is short term or long term or only long term? 54 long term only. 54B and 54D short term also. Next, 54 EC. 54 EC. What type of SSEs, guys? All SSE. What will you sell? Only land or building or both? Land or building or both you are selling. Long term, not jewelry, land or building or both. What type of capital gain? Long term capital gain. And you are investing in these bonds. Specified bonds you are investing for 5 years. What are these bonds? Rural Electrification Bond, NHA, National Highway Authority Bond, Power Finance Corporation, these bonds. These are called as 54 EC bonds. You should invest within 6 months from the date of transfer. So first you will sell land or building or both. Type of the gain should be long-term gain. Within 6 months from the date of transfer, you will invest in specified bonds. What are these bonds? Rural Electrification Bond, National Highway Authority Bond, Power Finance Corporation Bond. What is the maximum amount you can invest? You can invest whatever you want, but what is the maximum capital gain that they'll give you? Maximum is 50 lakhs. The maximum amount in the bond cannot exceed 50 lakhs. And what is the maximum capital gain exemption? 50 lakhs. Land or building or both. Is residential house also building? Yes. So my question to you is, can I sell a residential house, invest 50 lakhs in 54 EC, remaining can I invest in buying one more house? Can I sell a house, invest 50 lakhs in 54 EC bonds, remaining amount can I invest in one more house? Can I claim exemption under 54 and 54 EC is what I am asking. Can I claim exemption in 54 and 54 EC? Yes, definitely yes. I can claim exemption both in 54 and 54 EC, both. Right? Claim exemption both in 54 and 54 EC. Correct? Yes. So, lock-in period 5 years, guys. Cannot touch this for 5 years. So, ATC exemption you will not get if you follow 54 EC. There are specific bonds given there. ATC anyway is not given in the new regime. Leave it. So, what is 54 EC, guys? Selling land or building or both and then buying bonds. Can I buy 50 lakh in each or all put together 50 lakh? This also it went to court. One fellow said 50 lakh is for each. Then they had to change the law and said 50 lakh is overall. Earlier it was investment in a bond must be 50 lakh, like that dialogue was there. So this fellow put 50, 50, 50, 50 and claimed 2.5 crore. Went to court. Court said, yeah, you are correct. Then Nirmala madam changed the law. They said overall 50 lakh. So see, all these are decided cases actually. It is overall put together. Guys, 54 EE is kind of irrelevant now. You can leave it, you can just go through later. Why? Because these units must be issued only before 1/4/2019 and it is allowed only for 5 years. Standing today, don't you think so? It's already over. Yes, so you can ignore this. You can just go through, that's all. 54 EE. This is again long-term capital asset. Is not land or building. Anything I sell and buy specified units of certain things, notified fund. It's irrelevant now because that exemption no longer exists. So you can just go through for your knowledge. That's all. It will not come in the exam. Next is 54F. Okay, do one thing. 54 to 54, this one. 54 to 54 EE, quickly read once. Because 54F is like a revision of 54 only. Take 3-4 minutes, finish off. 54 to 54F till F. F we will see together. Exemptions are very important, guys. They regularly ask in the exam. Quickly, take 3-4 minutes, finish it off. Come on, all of you. Guys, so 54, tell me, selling of house, buying house. Long term or short term? Long term. And it's applicable to individual HF? Yes. 54 FUC. Individual HF, same. Long term capital gain, same. Buying one house in India, same. What is different? Any long term capital asset not being a residential house. So 54 is selling a house, buying a house. 54F is selling other than a house and buying a house. If I sell jewelry and buy a house, 54 or 54F? 54F. The only difference between these two. But one more other difference is there, right? In 54, I sell a house, buy a house. 54F, I sell a house, sell other than a house and buy house. When should I buy? Same, guys. Purchase 1 year before or 2 years after. If I want to construct, 3 years. In 54, what was exempt? Capital gain was exempt if the capital gain was invested in the new asset. You should invest the capital gain. So in 54, say you sell the house for 3 crore. Cost of acquisition all put together 2 crore. Capital gain is how much? 1 crore. You invest this 1 crore in new asset, then capital gain is exempt. Or no? So you need not invest 3 crore. You invest only the capital gain, 1 crore. That 2 crore is your, you can do whatever you want with that money. 2 crore. 2 crore you have already spent many years ago, no? Now you have got it back, that's all. You would have spent 2 crore some other many years ago, now you have got back that money, that's all, nothing else. That you enjoy. 1 crore you invest. But guys, 54F, no? Very interesting. Sell it for 3 crore, cost of acquisition crore, capital gain crore. They are telling in this section to invest the consideration. Invest the consideration. You invest full 3 crore consideration, you will get 1 crore exemption. If you invest 2 crore consideration, you will get proportionate what? Exemption. I repeat, if you invest the net consideration 3 crore, capital gain exemption is 1 crore. If you are investing only 2 crore, what will be the maximum exemption you will get? 2 by 3. Yes, that is, you will only get how much? 66 lakhs, that's it. 6 lakhs, 60,007. That's the difference between 54 and 54F. In 54, you will only sell a house, buy a house. And for buying a house, what will you invest? Capital gain. In 54F, you will sell other than a house and buy a house. What will you invest? Net consideration. If you invest the full net consideration, you will get full capital gain exemption. If you invest part net consideration, you will get part exemption. So now, see, now you will understand. Take this. Net consideration is fully utilized, then capital gain is fully exempt. If net consideration is partly utilized, then capital gain will be exempt proportionately. What did you do here? 1 crore into 2 crore by 3 crore. Correct, no? 1 crore into 2 crore by 3 crore. You did 1 crore into 2 crore by 3 crore. What is 1 crore? Long-term capital gain, 1 crore. What is the cost of new asset? The cost of new asset was 2 crore. That's why I am investing only 2 crore. Right? The cost of new asset will be 2 crore. That's why I am investing only less. No. The cost is more, I will invest the full amount. If cost is less, I will invest less. What is the cost of new asset? 2 crore. And what is the net consideration? 3 crore. Same calculation, 1 crore into 2 crore by 3 crore. How much will I get? Exemption, 66 lakh, 6,057. Same lock-in period, no change, 3 years. Now the question is, I have one house already. Can I sell jewelry and buy one more house? What do you think? I already have one house. I'll sell jewelry and can I buy one more house? I'm not buying two together. Can I have one extra house? Read the first condition and tell me is it possible or not. What do you think? Can you or can you not? You can, guys, read the English properly. The SSE does not own more than one house other than the new asset. I told you the new asset is the second one or the first one? Second one. Can you have one more? Yes. You should not have more than one. Normal English. If you have two, can this new one be the third one? No. If you already have one, basically you have two homes. Or you have one home. You have one home already. Can you sell jewelry and buy one more home? Yes. You have two homes already. Can you sell jewelry and buy the third home? No. See the language. If the SSE should not own more than one house other than the new asset, which means the new asset should be the second house. You should not have more than one house other than the new house. Means maximum including new house should be how much? 2. Including the new house, maximum home should be 2. If you already have two homes, can you buy the third home? No. Yes. Yeah. In 54, can you have any number of homes? Yes. I buy one house, I already have two homes. I sell one house and buy two new homes. Possible? Once in the lifetime is possible, no? Yes. But if I end up having three homes, what is the income from house property? If you remember, three self-occupied property if I have, third one will be deemed to be let out. Let and all is different, but can you have three homes? Why not, guys? I can have any number of homes that I want to. Who are you to stop me? Right? Yes. Then there is again a lock-in period. After you buy the two homes, SSE shall not purchase within a period of 2 years after the date of transfer or does not consider the period 3 years after the date of transfer any residential house other than the new asset. They are trying to tell once you buy a new house, you already have one more house. Once you buy a new house, you cannot buy one more for minimum 3 years or 2 years as the case may be. To do all these things, gone. The new asset cannot be sold. That is one part. So how does it work? Very simple. All mixed. You already have one home. Sell jewelry. Can you buy new home? This new home lock in 3 years cannot be touched. But in the meantime, can you buy one more third house immediately? I'll keep two. I buy a third home. No, this is this rule. The third home also not possible for 2 years after buying this house or 3 years after constructing this house. What they're trying to. Or even if you don't have a house, it's okay. Can you sell jewelry and buy a new house? Yes. Can you? And that new house should not be touched for how many years? 3 years. Can you buy a second brand new home within 3 years or within 2 years? No. Are you understanding? So this is a lock-in period for the new house. This is an additional condition for what? Other than the new asset. Cannot buy any residential house other than the new asset. So if you already have one house, the new house you can buy. New house you will keep for how many years? 3 years. Can you buy the third house? No. For how many years? 2 years from the purchase of the new house or 3 years from the construction of the new house. Let's say you don't have any house. Can you sell jewelry and buy the first house? Yes. That first house should be locked in for how many years? 3 years. Can you buy a second house? No. For how long? 2 years from the end of buying the new house or 3 years from constructing the new house. I hope you understood. No confusion. Right? Lock-in period 3 years will still exist. That's the difference between 54 and 54F. Other things remain the same, guys. 10 crore amendment also will apply. Capital gain also normal. See, the net consideration is 15 crore. Capital gain is 7.5 crore. Amount incurred for construction of new house is only 6 crore. I can deposit only the balance 4 crore in the account. But if I deposit 3 crore before return filing date, the deemed cost of new house would be how much? Crore that I already spent. See, residential house 6 crore plus whatever I have transferred to capital gain account scheme 3 crore. That's all I can touch. Maximum amount you can use for the new house is how much? 10 crore. Can I buy a house for 6 crore and construct something else in the same house for 3 crore? Yes, it will become cost of improvement. Ultimately, how much can I spend? 10 crore. What is the capital gain? What is the net consideration? 15 crore. Can I invest full 15 crore? No, I can only invest 10 crore. In that new house cost 6 crore. And I want to deposit only 3 crore. Can I deposit only 3 crore? Yes, I can. Maximum you can deposit how much? 10 crore. The deemed cost of new residential house would be 9 crore. And the exemption will be, I already told you, capital gain 7.5 crore. Cost of the new house 9 crore. Full net consideration 15 crore. This 9 crore can be split between the cost of the house plus cost of improvement. Overall 9 crore. Same like our example. 1 crore into 2 crore by 3 crore. Same example. Capital gain 7.5 crore. What is 9 crore? Cost of the new house including cost of improvement that I have planned. What is the overall net consideration? 15. What is the answer? 4.5 crore. Or no guys? Are all the exemptions. Now what I have done is I have given this general notes on exemptions, very important. These are all exam adjustments. I have seen the previous 15 years question paper, taken out all the important adjustments and given as notes. Then we have the summary and all those. That's this important. Before that, guys, just see, take 2-3 minutes and read this first. Summary, full summary read. Because once you read the summary only, I'll be able to do that thing. Read. Take 2-3 minutes, read guys. Come on. Done. This is the summary, guys. Now, this summary, you have studied everything. You see 2 points. By one. Guys, now in 54 and 54F, I'm going to buy a new house. House will include land or only building? Land. Can I buy a land and construct a house? Yes. Exemption will be for only building or land and building? Guys, I'll sell a land, sell a house or sell jewelry, buy a house. House will include land, no? Land is 1 crore, building is 2 crore. Exemption is 3 crore or 2 crore? 3 crore. That to clarify, point number 1. Read. Cost of land acquired by the SSC will also be eligible for exemption along with the cost of construction or acquisition. Or no? Second, construction should be done within 3 years. Can I start construction 2 years before only? Yes, I can start the construction before selling the house. Can I start construction of a new house before selling the old house? Yes. But when should the construction be completed? Within 3 years. I'll give you time to read later. We'll just do the points. Then you read and then we'll take a break. Option of investment in 2 residential houses is only applies to 54 and not 54F. In 54F, I can have what? Only 1. Or no, I can't buy 2. To claim exemption under 54, purchase of residential house coupled with possession is condition, not registration. Registration is not needed. If you take possession of the house, that itself is good enough. Now in this, what do you say? I told you one dialogue, no? In these apartment associations, you will have the house or the shares. Shares. So when can you claim exemption? If you buy the house or if you buy the shares? Buy the shares. I don't want to buy the house. I'll buy the shares. That itself is, I'm buying a new house. Then in section 54, no way it says that you should, they'll just say buy a residential property. Are they saying it should be self-occupied? You can buy a property and give it on rent, no problem. You'll still get the exemption. Some people, what they do, no? They will buy 2 homes next to each other, 2 flats. So this will be a full flat, 2 flats are there in that. Can I remove the wall and make it a full house? Yes. So basically, 301, 302, 303, like that apartments will be there. I will buy 301, 302. While buying only, I'll buy like this. 2 different registrations will be there. That's okay. But 1 house it will be ultimately. So under 54, will it be considered as 1 home or 2 homes? I'll tell the builder, sir, I want 301, 302 for me only. So you are constructing only, I don't want the wall. I want it like a full house. I'm buying 2, don't worry. By 1.5 or 3 crore I'll buy. But for 54 purposes, is it like buying 2 homes or 1 house? This went to court. Because in 54, you are allowed to buy 2 homes, no? And it's only once in the lifetime of the SSE. SSE is telling, no, this is not 2 homes, this is 1 house only. Because ultimately we are living it as 1 house. You think? They said there to be just 1 house, not 2 homes. Even though the registration is separate, since it is adjacent to each other, considered as 1 house. So you can still some other day end up buying 2 homes because that 2 homes is taken once in the lifetime. 2 homes they are trying to tell it can be 2 separate buildings on the same building, different floors, like that. You should deposit that capital gain account scheme within the due date of filing the return. 31st July is the due date of filing the return. Because of some administrative problem, technical problem, you deposit it on 1st August or 2nd August. Can you claim exemption or no exemption? Ideally, no exemption. But the thing is, you at least done it, no? What was the intention of that? You cannot keep that money elsewhere. You should keep that money in that scheme. Procedural delay, administrative delay, 1 or 2 days, few days, it is pardonable. You can claim exemption. Problem. Because you have to see the intention, not the procedure. What's the intention? Don't keep your money elsewhere. Keep it in this scheme. I was supposed to do it by 31st July. Okay, I missed out. 10 days later, I did. Sorry. But the intention is there. Full money is kept there. What do you think? No problem. Allowed. You can read all that later. I'll give you time. Can I extend the house? I already am living in a house. Can I build 1 more floor on top? Yes, that can be considered as a separate house because many people live ground floor, one family will live, 1st floor, 1 family will live. So it is considered as a different thing. No problem. Yes, I can make it different. One more thing, guys. You will read that later. You'll read it on your own. Now only I'll give you time. Last part. We have always seen urban agricultural land I have sold and bought what? Rural agricultural land or urban agricultural land. What if urban agricultural land is taken over by the government to make some road? Is there any exemption at 54? No. In 54 only industrial land and building is there. Urban agricultural land is not there. For that we have one more exemption, 1037. Exemption for urban agricultural land on compulsory acquisition. Capital gains arising to an individual or HF from the transfer of urban agricultural land is exempt provided the following conditions are satisfied. Land was used for agricultural purposes 2 years, same like that other section. Land is compulsorily acquired by any law determined by central government or RBI. Compensation is received on or after 1/4/2004. Full exemption, full money is exempt. This exemption is not as per 54B because 54B is transfer, proper voluntary transfer. 1037 is compulsory transfer via compulsory acquisition. Got it? So please read. Okay, so let's solve few problems in the concept capsule and then we'll get some clarity and some confidence in these areas. So question, all this was done. 31. Question number 31. Exemption. Surya owns a residential house which was purchased by him in 1985 for 80,000. FMV as on 1/4/2001 was 2,10,000. So tell me, should I take 80,000 or 2,10,000? And SDV as on 1/4/2001 is rupees 1,90,000. So what should you take? SDV or FMV, whichever is less, and that tan 80, whichever is more. So I should take 1,90,000. The house is sold by him on 23rd August 2024 for a consideration of 27 lakhs. Okay, for now we'll take indexation, later we'll see. The brokerage and expenses on transfer was 15,000. Compute the capital gains. If we invest 5 lakh for purchase of new house on 21/2/25, this second, if that house property is again sold, what to do is the next one. Till here, what will be the answer, guys? First of all, if the house property so purchased 21/2/25 is again sold on 17/9/25, can you sell like that? No, you should keep it for how many years? 3 years. Otherwise, the exemption that you got will be withdrawn. Or no? Yes. So how will it be withdrawn? We'll see. So in assessment year, this one was sold in the assessment year 25/26. One is assessment year 25/26 and assessment year 26/27 it is sold. So we need to do certain adjustments, we will do it. Exemption, how much exemption, all that we'll see. So now guys, first of all, computation, you should write a note with respect to computation of FMB as on, what is the FMB as on 1/4/2001? What value should I take? What is the cost of acquisition? So for that you should write a note. What you should write? FMB or STV, whichever is less, and that step number 1 to cost whichever is high. Hence the mark, the value as on 1/4/2001 is dash. That you write down. Come on, write. Do it. You only do it. Step number 1. What is step number 1? First is what? Computation of value as on 1/4/2001. So answer guys, tell me, step number 1 what? SDV or FMV, whichever is less. Write down SDV how much, FMV how much, write down, and then do whichever is less. Step number 2 will be what? Step number 1 or cost, whichever is more. Already done it. Yes or no? Yes, do it. Write it on your own. This note you have to write. So I am doing the value as per 1/4/2001. Step number 1 is SDV as on 1/4/2001 or FMV as on 1/4/2001, whichever is less. Step number 2 will be step number 1 or cost, whichever is high. What is the answer? 1,90,000 is the answer. Now I have to do what? Assessment year? Yeah. Calculation of capital gain for assessment year, which one? 25, 26. I'll show you, then we can answer. FEOC 27 lakhs. Do you agree? Given in the question. Where is it given? See here. 27. Less transfer expenses, how much? 15,000. 26 lakh 85,000. Stay with me. Then index cost of acquisition will be 1,90,000 into when is it sold? 24. So 363 by 100. This figure will come. Long term capital gain will come. And they see here, he invests 5 lakh for the purchase of new house. So what is the exemption under 54? Selling old house, buying new house. What is the exemption under 54? 5 lakh. Or no? However much you invest, that only will be the exemption. Capital gain or investment or the cost of the new house, whichever is less, is invested only 5 lakh. 5 lakh will be the exemption, and finally you will get one amount. Tell me guys. Do the calculation and tell me. 1,90,000. You write this down first. Write this down and tell me the long term capital gain. Left side, left side. 1,90,000 into 363 by 100 is how much? Lakh. Everyone got this? Then subtract 26 lakh 85 minus 6 lakh 89. He should have invested 9 lakh 95 300 to get full exemption. How much did he invest? 5 lakh. So how much will he get exemption? 5 lakh. So 19 lakh 95 300 minus 5 lakh is 14 lakh 95,300. That will be net long term capital gain. Everybody with me understood this? Copy. Okay, one before that. In 26-27, what did he do? You see, he sold off that house for 9 lakh. If he sold for 9 lakh, what was the cost of acquisition of the new house? 5 lakh. But guys, that exemption that you got earlier will be withdrawn. How will you withdraw the exemption? By reducing it from the cost of acquisition. So cost of acquisition will be 5 lakh minus 5 lakh, nil. What is the short term capital gain? 9 lakh. Did you understand the withdrawal of exemption? Everyone? Please copy guys. This is the answer. Question number 31. Accept cap. Copy. Yes, got it, guys? So that's it, simple. So what do you mean by exemption that you have got earlier will be withdrawn, which means it will be subtracted from the cost of acquisition. So you have already taken this benefit, it will be subtracted from the cost. Subtracting from the cost is like adding to the profit, or no? 32. Mr. Arav owned a residential house in Jaipur. It was acquired on 27/6/2010 for rupees 30 lakhs. He sold it for 1 crore 57 lakh on 1/1/2020. Sorry, 27/1/2020. So when did he acquire, guys? 2010-11. When did he sell? Yes, 1920. Just because you see 20, don't make it 2021. Yes, 1920. Mr. Arav utilized the sale proceeds to the above property to acquire residential house in Nagpur. Possible or not? Yes. When should he buy? 1 year before or 2 years after? Let's see when he has bought. He has bought on 22/6/2020. Is it 1 year? Is it before or after? After. 5 months after. Is it allowed? Yes. How much did he buy it for? 2 crore 5 lakhs. He can buy it for whatever he wants. That full capital gain will be exempt if he buys it on time. This house property was sold on 31/12/2024. Is it sold after 3 years or before 3 years? After 3 years or before 3 years? After 3 years. So is the lock-in period valid? Yes. You should keep it from 22/6/2022, 21/22, 23. Yes, 3 years over. After that, he can sold. And he purchased another residential house in Bangalore for 2 crore 57 lakhs. Will he get again exemption? Yes, why not? Correct? Single house. Property at Nagpur was sold for 3 crore. What do you think? Jaipur he had, and he bought another house in Bangalore for 2 crore 56 lakhs. But what is the selling price of that new old house? 3 crore 25 lakhs. So first he had a house in Jaipur. He sold it for 1.57 crore. Bought a new house in Nagpur for 2.05 crore. After 3 years, he sold the house in Nagpur for 3.25 crore and bought a new house in Bangalore for 2.57 crore. Got the sequence? Yes. Calculate the capital gains for the assessment year 2021. Why in 2021 what happened? First exemption has happened in 2021. Next in 25/26, second exemption would have happened. Right? Will you try? Same. Full value of consideration minus transfer expenses minus cost. Try. Please try. Come on, guys. All of you, please try. 2 distinct years you should do. That's all. Assessment year 2021, you will get exemption. And again in 25/26, you will get exemption. Fully try, guys. Please try. It's okay if it's wrong. I really don't care. But please try. Same guy, Arav. Two calculations will come. One in the year 2000, assessment year 2021, come 25. One, cost of new asset or capital gain, whichever is less. What is it, guys? First of all, Jaipur house. Jaipur house, guys. First of all, which year? Here. Assessment year 21. Tell me. Full value of consideration. Do you agree to 1 crore tax? Yes. Less cost of acquisition, how much? 30 lakh. When did you acquire it? 1011. What is the CII for 1011? 167. What is the CII and when is it sold? 1921. And what is the CII for 1920? 89. 89 divided by 89 divided by 51 lakh thousand. What? Then what is the gross? What is gross LT? 1 crore 5 lakh 8,000. Got, yes. Now this entire amount he could have invested in house. How much did he invest? 2.05 crore. How much could have been invested? 1 crore 5 lakh. He invests whatever. What is the capital gain or investment, whichever is less? Capital gain or investment, whichever is less. So it is either 2.05 crore or capital gain, whichever is less. Which is less? Capital gain. So it is 1 crore 05,083. Net LTCG nil. Everyone got this? Next, in the assessment year, which is year 25-26. What is the full value of consideration, guys? 3.25 crore, yes or no? Yes, I have given here the Nagpur, whatever this Nagpur house was sold for 3.25. Then I bought a house in Bangalore. Less index cost of acquisition. Tell me, what will be the index cost of acquisition? First of all, hold on. Get the exemption or not? Will there be any subtraction or not? Why? It after lock-in period. When did he check this? Years from the date of its acquisition. Other acquired 27/1 did the so it. The house property was for 20. Let me change the question, make it more. Whatever you have written, correct. Don't worry about it. 100% right. I'll add some masala. Let us make 3. Whatever you have written is correct. Don't worry. I'm just changing a little just to make it more tricky. Different iteration. So I've done it correct, straightforward question, doubt about it. You would have done it correctly only. I'm now changing it. If I make it 2023, now tell me, will the answer change? What will the answer come? First of all, you not have sold from which day? 27, 1, 22, 22, 21, 23. Already sold it when? My answer change or not? Still after 3. Leave it. Now let's suppose just an example. In case they have given that within old, what will happen to the cost of acquisition? What is the new cost of acquisition of the old house? 2.05 crore. It will become 2.05 crore minus 1 crore 5 lakh 8,083 and become 0.05 crore by whatever exemption granted earlier will not be allowed. Understood? Assuming it is sold within 3 years. Now let's assume the normal only, leave it. Now tell me guys, what is the cost of acquisition was without assuming that it is not sold with, let's assume it's sold after 3 years only. That normal, whatever you have solved only, I'm redoing now. Tell me guys, what is the index cost of acquisition? What is the cost of acquisition? So 5 crores. You tell me, when is it sold? 24, 25. What is this thing? X 360 divided by when is it purchased? It purchased 2021. When is the old house purchased? Guys, sir, 7. Did he purchase it for 2.05 crore? 2021, not 90. Yes or no? 2021. Tell me the CIF for 2021. Not? Tell me the math here. Much? 2 crore? 7 lakh? 52? The difference? Everyone getting this, no? Lakh? 7 lakh? 7,000? Okay. Now tell me guys. House or capital gain, whichever is or whichever is more, whichever is less. What is a new house? How much? How much is a new house? Bangalore? No. Crore 57 lakhs. House is crore 57 lakhs. Or lakh. Whichever is less or whichever is more? Less. Or no? My question is the Bangalore house is bought 25, there is no, but Old house sold on. Nagpur property was sold on 1st December 23. What is your answer? Nagpur house. What if it is 22? Tell me, do the calculation. The Nagpur house is sold on 30/12/22. What will be the capital gain impact? Bangalore house is purchased correctly only. When is Bangalore house purchased? When is Bangalore house purchased? 12/3/25. No change. It is done within 3 years. Done within 3 years. Yes. That's fine. Bangalore house, no tension, guys. Same calculation only. 3.25 crore. No doubt about it. This will change. Tell me the index cost of acquisition. It is or less. There was no lock-in period. The whatever was allowed before will not be allowed now. Drawn. How much, guys? Crore 5 lakh minus 1 crore 5 lakh 8,383. Everybody with me? Yes. Into 363 by 301. Tell me. Everyone understood this? The exemption allowed earlier will be drawn. Everyone? Yes. What her name? Can't see you. Understanding? How much? All others I am able to see. Soumya, no? Soumya I am not able to see. Yes, because of this camera. Tell me, how much? 3 crore, no, before that, 3,425 lakhs minus this much. How much figure, guys? Is told something. 1 crore? One, no? Tell me the difference. Will be my long term or short term? Short term or long term? More than 2 years now, guys. Long or short? Earlier it used to be 3 years and all that. Now it is 2. Yeah, tell me the gain, how much? 4 lakh. 3 not 10. 310. 310. Fine. This is the long term gain. Let's exemption. Exemption will be what, guys? Exemption will be the capital gain invested or actual what do you say? Or actual investment, whichever is less. What is the capital gain? 2 crore 4 lakhs. What is the new amount that you are investing in that 2 crore 50 lakhs? 2 crore 50 lakhs house in Bangalore that you are buying. Now tell me, guys, what would the capital gain be? Nil. This calculation will be see. Any doubt? An additional question we have done. That's all. Nothing. Come on. Solve question 3. All of you try solving. Sartak. for everything. Once we do the tax rate, later when we do the other problems, we do with indexation, without indexation. For everything, indexation. Because see, tax rates are most important. One is 3%, one is 12.5%. So do tax rates. Maybe tomorrow we'll start tax rates. Okay? That time you'll get a clarity. But now, if you are doing exemptions, solve it with. Just do one thing. Just tell me the SDV first. Should it be on the registration day? Should it be on the possession day? Should it be on the agreement for sale day? We had done. Generally, SDV is on registration. But we told one thing. What? Part of the amount, if it is paid via RTGS, NEF, that is otherwise than cash, then you can take which day? Not possession. Agreement for sale date. Correct? No? Agreement for sale date. You had written it down. Yes. It is this question here. So apply that and tell me. The SDV part. He wants to sell his residential house Kanpur 0.5 CR. Sale procedure to be done as follows: 20% account, 50% on date of possession, balance on 20% I have already paid. Registration was done on 41. Paid the sale proceeds as per the sale. Only SDV I should take. What is SDV? They have given SDV, guys. SDV they have given on all 3 days. 16th August is the date of first where you got some amount. 15/12 is the day you got possession. 14/1 is the day you got registration. What will you take? So the value determined by stamp duty authority, what will you take? 1.7 crore. So first and foremost in this question, SDV will be 1 crore 70 lakhs. Fine, SDV is that much. But guys, you sold it for how much? 5. Next you should do 50C. SDV, is it greater than 110% of consideration or is it less than? There are two concepts here. Concept number one. Concept number one is computation of SDV as on which day. Concept number two is 50C. What is the FVOC? Is it 1.5 crore or is it 1.7 crore? Why is it 1.7 crore? Because SDV is greater than 110% of consideration. What is consideration? 1.5. What is 110%? 1.65. Is 1.7 more than 1.65? Yes. So what is SDV? 1.7. Then answer is easy. Correct? So first is what? Computation of SDV. So what will you write there? I am just telling you what to write. You write on your own. What will you write? First is computation of SDV. So generally that same dialogue I made you write, you should write. Generally SDV is always computed on the date of registration. However, if some amount has been paid through otherwise than cash, then the SDV as on the agreement for sale date only can be taken. In the given question, since 20% has been paid on the date of agreement for sale, SDV as on 16th August has to be taken and SDV will be how much? 1.7 crore. Got it? 1.7. Point number 2. Point number 2 is what? Computation of FVOC as per section 50C. So section number I don't remember, no problem. I should check whether SDV is greater than 110% of consideration. SDV 1.7 crore, consideration 1.5, 110% of consideration 1.65. Is SDV greater than 110%? Yes. Hence FVOC is equal to SDV. What is FVOC? 1.7 crore. Oh, it's the same problem, easy. What is the FVOC? 1.7. Less what are the expenses they have given? See, On 1/4/2001, cost of acquisition was 30 lakh. After recovering sale proceeds, that's fine. This is the cost of acquisition, 30 lakh they have given. Correct? So what is the FVOC? 30 lakh. When did he sell the property, guys? 16/8/24. So what is the indexation? 1.7 crore minus 30 lakhs into 363 by 100. Yes or no? Will 100 come or 105 come? Right. Right. What is it? Answer. Lakh. 10 lakh it can't be. Right? 1 crore, 8 lakh, 30 lakhs after indexation, 10 lakhs. Depreciation it is. Right? So 1 crore, 8 lakh, 90,000. Tell me, guys, difference. 1 lakh 10. What is the capital gain? 61 lakh 10,000. What is the cost of the new asset? Guys, he has bought 2 residential properties. Please see. 20 lakh, 35 lakh. 2 small houses he has got. Some outskirts he would have got. Who will pay 20 lakh house? No, nobody will give 20 lakh house for 20 lakh. So, cost of new asset 20 plus 55 lakh. So, what will be the capital gain? New asset or capital gain, whichever is less, will be the capital gain. 61 lakh 10,000 minus 55 lakh. It will be 6 lakh 10,000. Net long term capital gain will be 6 lakh 10,000. Right? Copy. More so, it is just the computation of that FEOC is the actual thing. Compute that FEOC, then it will be easy. Done? All of you? You're writing? Anyone writing? Right. Step number 1, computation of SDV. Step number 2, computation of FEOC. Step number 3, computation of capital gain. Neatly you write, chapter close. In your own words, whatever I have made you write only, you copy paste. No need of section number, nothing. I don't remember 50C, no problem. No one cares about all those things. Everyone wrote, guys? Done? All 34 guys. Come on, right? Question number 34, all of you. Eventually, you only have to solve everything. That's why now, if you are able to think properly, then I'm happy. I don't care if you get the wrong answer. Not my problem. It's okay. Thinking ability should come. Solve. What? So, what will you assume? Urban. If it is rural, this question only will not come. Correct, no? Make that change. Instead of 12th March 25, please hit 12th April 25. Hit 12th April 24, guys. Guys, solve. Whatever. Is it done? 12th April 24, sold urban agricultural land for 22 lakhs. What is the FEOC? 22 lakhs. Selling expenditure 50,000. Right. So, what is the FEOC? 22 lakhs. What is transfer expenses? 50,000. What is net consideration? 21 lakh 50,000. Now, tell me, how much was it purchased for? 2 lakh. Was it used properly? Yes. How long was it used for? 2 years. Have they given that? 2006 only, see. Land sold was purchased only, and the land was used for agricultural thing for his by his father. He not only has to purchase but also use it. Correct? No? Is he using it? Yes. What is it? 2 lakh. So 363 divided by 363 is which year? 24, 25. When was it purchased? 2006, 7. 2 lakhs. What is 6, 7 ka this thing? 20? Much. What is the LTCG? 10 lakh. Exemption. The LTCG or value of the new asset. LTCG is 15 lakh 50. What is the value of the new asset? 8 lakh he purchased and he deposited 4 lakh also in CGS. So both he will get. Why? Because that land he can do improvement also later, no? How much will he get? Exemption 12 lakhs. Ultimately it is 3 lakh 54,018. Everybody understood? 3 lakh 54,908. Everybody with me? Yes or no? 3 lakh 54,918. I just want you to understand how to think and solve the problem. I don't care if some here and there some stupid mistake you do, that's okay. But thinking ability should come. Like in the previous question, answer was very easy. You just need to think about what SDV to take and what FEOC to take. It automatically should come. It will come by practice. Question number 40. Come on. Right. Question number 40. Interesting question. What is it, guys? Unlisted shares 10,000 sold for 441 with the POC. Above shares of 10,000 is acquired in the following manner. One was gift, one was bonus, one he only purchased. For whatever he purchased, cost of acquisition come. Or no? He's selling 10,000. He's selling 10,000. For the 10,000 minus cost you should do. Cost has three components. One is received few shares as bonus. For bonus after 2001, what is the cost? Nil. For gift, everything flows from the previous owner. So 5,000 shares flows from the previous owner, including this benefit also you will get. Market price was 200 rupees per share. So you got a gift. The gift you should take as per the FMV as on the, what is the cost for the, what would have been the cost for the previous owner? It would have been 5,000 into 200. Same will be the cost for me also. Indexation, yes, that's what. I'm just saying the cost. After that only indexation will come. No, first the cost will come. After that indexation. And then this much he only purchased. 125 rupees for 3,000 shares. Apart from that, he also purchased residential house 25 lakhs from the sale proceed of shares. So he sold other than a residential house, bought a residential house. 54F will come. Exemption under 54F. He already owns a residential house. Is it okay? Yes. He cannot have more than one. Apart from the new one that we have discussed. He cannot have the third one. Can he have the second one? Yes. What will the answer? Sale consideration 10,000 into 400 and 10,000 into how much? 400 and it is. Is there anything else given? 400 and what? How much? 41. 10,000 into 441. How much? 44 lakh. Expenses on transfer nil. Net consideration 44 lakh 10,000. Tell me guys, index cost of acquisition 5,000 shares into 200 market price into 363 by 100. Why 100? 142,001. How much will it come up to? 2,000 bonus shares nil. Another 3,000 bonus shares, 3,000 shares into 125. The year 1011 or 1112? 1011. Sold which year? This year. 363 by what is 1011? 1? 8 lakh 20. Loss or profit? How much? If there is a loss, you get any exemption? Get any exemption? But if there was a profit, will you get exemption? Yes, depending on how much you invested. Capital gain to asset divided by net consideration, because in 54F it is about net consideration. About net consideration. Done? Okay, so let's just quickly revise yesterday's thing, and then today I'm going to show you one video which is very important, which is old 2018-19 video. It's very important for us to understand that. But before that, let's just quickly revise whatever we discussed the previous session. And today we endeavor to finish this capital gains at least, so that going forward we'll have the other small things come from other sources, salary. Main heads will be over, guys. There are many miscellaneous stuff, unfortunately, but they are all easy. Smaller units, and we'll have to finish all that. But there are so many units still pending. Deductions, then TDS, that is one more thing. So it's there, not that it's not there, but of course, it'll be little easier compared to all this. Right. So we saw the special provision 6 yesterday, and then we came to 7. 6 was what? Yes, intangible asset. We saw the cost of acquisition will be nil. And then 50 CA, capital gain in the case of unquoted shares. If the share value is less than the FMV of such shares, then FVOC is equal to FMV. Then we saw other things, special provision 8, that is where the consideration is indeterminate. Then FMV of the asset transferred will be the FVOC. And if I give you something, I take something from you, whatever I take will be my FVOC. And whatever you receive will be your FVOC. Also we saw. Then we saw the first proviso to section 48 and understood how the problem was earlier with respect to converting to INR and taking everything. Now no need to convert to INR, do it in dollars only. But you should take the average rate, so it will be the market value already. So that's why indexation is not there. So what should you do? Average rate, TTBR, TTSR, telegraphic transfer buying rate, telegraphic transfer selling rate. That and all you should do. And then any average rate you should take. Only the last part, the short term gain or the long term gain, that should be converted to INR at what rate? Telegraphic transfer buying rate. On which date? On the date of the transfer. Then we solved, when we saw exemptions. Tell me. Are you studying the material, guys? Yes, any doubts? Right? So once you study this, it becomes very easy. Then we saw the concept of exemptions, guys. In that 54, you are individual or HF selling a house, buying a house. You can sell house anywhere in the world, but you should buy only in India. Long-term capital gain. When should you buy the new house? 1 year before or 2 years after? Or you can construct 3 years after. Construction could have started before, but then you should complete it within 3 years. And then until then, you should transfer the money to an account called capital gain account scheme. Even if you invest part amount in the asset, whatever amount you transfer to CGAs, that also you will get exemption, assuming you will put it in that money in that house only. If you don't put it in the house, exemption withdrawn will be withdrawn. Can you buy 2 homes? Yes, once in the lifetime, provided the capital gain should be less than 2 crore. You can't sell it for 8 crore and buy 2 homes. The capital gain should be only 2 crore. Capital gain, not sale consideration. Sale consideration can be 5 crores. Capital gain must be 2 crore. And maximum capital gain now is how much? 10 crore. I mean exemption, 10 crore. Beyond that, you cannot take. So this is for middle class people. 54B is what? Selling of an urban agricultural land and buying rural or urban agricultural land. It should be used for how many years? 2 years. Not owned, used. That's why short term also will come there. And you should purchase within the 2 years. That is the one thing. Next we saw 54D, which is compulsory acquisition of industrial land and building. This is for all SSEs. Government will compulsorily acquire and give you money from the day you receive the money. Within 3 years, you need to buy another industrial land and building, you will get the exemption. 54EC is specified bonds while selling the house property, selling the immovable property. you will get specified bonds. You can invest. Maximum investment 50 lakh rupees. That's all. Then 54E you leave. 54F, that is selling any other long-term capital asset other than residence and buying residence. Same, other things are the same, but here interestingly, capital gain is exempt based on how much net consideration you have invested. If you have invested full net consideration, full capital gain exempt. If you have invested 50%, then 50%. Simple. Done. And after this, we went on to see. That's all, we have to solve the sums and all those things. That's all. So today we're going to do a very, very important concept called as tax rate. So write down, guys, very important. Tax rates under capital gains. Most important because it was amended in Finance Act 24. Most important, you will understand now. Tax rates or capital gains. So guys, before 2004, no, it is just for your knowledge. You should know everything, whatever has happened. Before 2004, share market, no, was there always since many, many years. What was the tax rate? Just for your understanding, long-term capital gain was 20% and short-term capital gain was normal slab rate. Where was this? Share market only. Share market means what? Equity oriented funds, equity shares, mutual funds, which listed mutual fund units. For these things, if I sell long term used to be 1 year, 2 year, 3 years as the case may be. Predominantly it was 1 year only. You would have seen, no, left hand side. All listed stock exchange securities will be under how many years? 1 year. So if you sell it off within 1 year, normal slab rate. If you sell it off for more than 1 year, what will it be? Long term. So this was the rate. In 2004, Finance Minister P. Chidambaram introduced something called as Securities Transaction Tax, STT. What did STT do? This came from 1st October 2004. This is like a tax on every transaction happening in the stock market. Apart from capital gain tax, he said there is something called STT. People started crying, 2 tax I have to pay. They said no 2 tax. STT you have to pay. If you pay STT, then if there is a long-term capital gain, then guys, what will happen? Exempt. Short-term capital gain, you have to pay 15%. Instead of slab rate, they made it 15%. So slab rate used to be 30%, no, higher slab rate. So for every transaction, they introduced a tax called STT. And then if it is long term, if you hold for more than 1 year, what was it then? This thing, what do you say? Exempt. Short term, if you hold how much? 15%. This was there from 2004 to 2018. No tax on long term capital gain. Imagine the money people made. Stock market. I held it for more than 1 year, sold the shares, got a gain of 10 lakh rupees. Is it tax free? Yes. That's why there was a stock market boom from 2004 to 2018. And why did it come in 2004 STT? Because immediately after the Harshad Mehta scam. Do you know Harshad Mehta scam? Yes, it happened in 2002. After Harshad Mehta scam of 2002, people lost faith in the stock market. Now I want you to have faith in the stock market. So what I'll do? Give discount. How I'll give discount? No tax. Please come invest. For every transaction, one small STT I will deduct. After that, no tax. Come and enjoy. So people came, obviously. Now, 2018 budget speech. Arun Jaitley said, enough is enough, boss. For 14, 15 years, I've enjoyed no tax. Enough. Now at least, city also will be taxed. Little bit of capital gains also we need to do it. Just a little bit of capital gain. This is not for property and all, only for shares. I told you, for residential house property, what is the tax rate? I told you without indexation, with indexation, 20% I told you. But that is for property. I'm talking only about shares here. What type of shares? Which are dealt in the stock market. Listed equity shares, equity oriented units, anything equity oriented listed in the stock exchange. What is the rate? You know, what was the rate? Exempt it was in 2004 to 2018. I'm not talking about immovable property and all those things. Now, you see what Arun Jaitley ji told, the year 2018. So, as CA students, we should know all these things, guys, because ultimately, no, to understand all these things. Let's see.
Currently, the long-term capital gains arising from transfer of limited equity shares, units of equity-oriented funds, and unit of a business trust exempted from tax.
Correct, no? In that year 2018 also it was exempt. What was exempt? Units of mutual fund, listed business trust, and also equity shares. That I told you. 2004 it was taxable till 2004. Then they 2004 to 2018 exempt. So in 2000, this is in 2018, 7-year-old video, right? He's no longer, half the people you see no longer there. This is Anant Kumar from Karnataka, is no longer there. Half people, Tamar. That old video it is. Even Arun Jaitley himself is not there now. Very good, FM was brilliant. Even Chidambaram is very good.
The reforms introduced by the government and the incentives given so far, the equity market
Surprise will come. Keep seeing the video.
has become buoyant. The total amount of exempted capital.
Us. Yes, sir. Did you see what I'm saying? Yes. Who knew that, 7 years ago she'll be sitting there and now longest serving finance. Crazy.
From the listed shares.
Auntie is telling you talk whatever you talk, bro. I will anyway come soon. You do whatever you want.
Is around 3,67,000 crores as per return filed in the assessment year 2017.
So anyway, now you leave auntie. I'll just rewind little. You see again.
The reforms introduced by the government and the incentives given so far, the equity market has become buoyant.
What he's trying to tell is with the all these 14 years of exemptions, etc., equity market has become buoyant. Buoyant means what? It is floating nicely, it is doing really well. So he's telling when it's doing really well, least I can do is little bit, one small percentage of tax I want to charge is what he's trying to tell.
The total amount of exempted capital gains from the listed shares of units is around 3,67,000 crores.
See, he's telling every year how much is exempt? 3,67,000 crore is exempt. Because that is how much you are buying and selling. Now he's telling, boss, you have enjoyed a lot. 14 years I've enjoyed. Ivaga muchkondo pay. Is what he wants to tell. That's all.
As per return filed in the assessment year 2017-18. Major part of this gain has been accrued by corporate and LLPs. This has also created a bias against manufacturing, leading to more business surpluses being invested in financial assets.
See, superbly is telling, because it is exempt here. Where is it exempt? In shares. Rather than putting money in manufacturing, where are companies putting money? Shares. Cheating, no? Like you are making money in by selling goods, and you have to reinvest in your business only, no, for manufacturing expansion. Instead of that, what you are doing? Putting in shares. Why? That is tax free. So he's selling large part of the money rather than manufacturing going here. So I need to reduce the rates and all there and then increase the tax here so that it will create a balance. Are you understanding the logic? Blindly no mugging up. You have to understand where it came from, right? As CA students, it is our duty to know where it came and where it all started.
The return on investment in equity is already attractive even without tax exemption. There is therefore a strong case for bringing the long-term capital gains from listed equities into the tax net. However, recognizing the fact that a vibrant equity market is essential for economic growth, I propose only a modest change in the present regime. I propose to tax such long-term capital gain.
This fellow, understanding everything, right? Fully understanding. He's thinking, when can I go and have pizza today?
Exceeding rupees 1 lakh at the rate of 10% without allowing the benefit of indexation.
That's all. What did he say? Any capital gain more than 1 lakh will be taxed at what rate? 10% without indexation. I told you house and all, if you sell with indexation, how much it is? 20%. That was still remaining only. But here what he did, from zero tax, he made it capital gain more than 1 lakh rupees without indexation. How much tax? 10%. So just 10%. So you sold shares for 1 lakh, you had purchased it for, you sold the shares for 2 lakh, you had purchased it for 10,000 many years ago. So you're selling no indexation. 2 lakh minus 10,000. How much? 1 lakh 90. Up to 1 lakh, no tax. Anything above 1 lakh only. Up to 1 lakh, no tax. What is the extra amount? 90,000. That 90,000, no indexation. I have not given indexation. 10%. 9,000 rupees you have to pay. That's what he's telling. Right? Yes.
However, all gains up to...
Now it is one deadly dialogue. So, I'll explain this. So guys, when did this budget speech come? This budget speech came on 1st February 2018. Right? Now, if he is announcing today, and generally this is the budget for the year, previous year 18-19, right? So, which starts from 1st April 2018 to 31st March 2019. Always it will be like that only, no? So, this is the budget speech of 18-19, which means for the previous year 1/4/18 to 31st March 19. Assessment year 19-20 budget speech this is. Because budget is always what is going to be proposed now. If I announce on 1/2/2018 that tax will be levied from which day? 1st April. Any sale that you make, any sale, long-term capital gain, the equity market, if you make more than 1 lakh gain, what is the tax rate? If you do this after 1/4/2018, I'm announcing that tax will happen in 1 month. February, March, 2 months. After 2 months, tax will happen. If I tell like that to you, what will you do within the next 2 months? Left, right and center, you will sell. 100% because it is exempt. Stock market will crash. He knows that when he is delivering that dialogue like this, telling budget, you can't say from today it will apply. It is always from which year? From 1st April. So when he is putting that dialogue, he knows today only after the budget people will start selling. Correct? Let's say I had purchased something in 2010 for 20,000 rupees cost. Just before the budget, 31st Jan 2018, that amount is coming up to, it has increased so much guys, it is valued at 1 lakh. So the FM we know is 1 lakh rupees. Imagine, after the budget on 1st February, I sell it off for 1 lakh. 1 lakh minus 20,000. 80,000 rupees tax free. But if I sell it on 1/4/2018, assume it is, it has become 1.5 lakhs now. It has become 1.5 lakhs. Then 1.5 lakhs minus 20,000, 1 lakh 30,000. On that 30,000 extra, tax 10%, 3,000. Simply Indians, why should we pay? This, I'm just talking about lakhs, thinking about huge amount of money. 30 lakh, 40 lakh, 50 lakh. So people will sell left, right and center. Now I want to stop this. On 1st February, you are the finance minister, what will you do? Are you understanding the logic? You have to stop this, no? Because you have to stop people from selling. Can you block the stock market? You have the right. No, people will kill you. Guys, Indian constitution, you can't just say stock market is no longer existing from today. 2 months stock market close. That and all you cannot do. What will you do then? Did you understand the logic? Everyone understood? Yeah. So let's say I bought it at 1 lakh 20. Let's change it. Now it has become 3 lakh rupees. So if I sell today, 3 lakh minus 1 lakh 20, 1 lakh 80 tax free. But if I sell the same on 1/4/2018 on 1 lakh 80 means apart from 1 lakh 80,000 I have to pay tax 8,000 rupees. Why should I pay? It was one small example, but people had lakhs and lakhs of money in the stock market. I want to tell people that even if you sell today, you will not get any profit for sure. How will I do? If I tell you that if you sell today, you will not get any profit, then you will not sell only, you will keep it. So Arun Jaitley said, he can't tax also. Tax will come only from 1st April. How will you as a finance minister discourage people from selling from February to 1st April? Come on guys, tell me. Selling price will be the same. FMA only will be the selling price, no? Obviously. Fair market value. Whatever is the market value in the share market, that only will come. So on 31st January, if it is 3 lakh, 1st February it will be 3 lakh 10, 3 lakh 20, 3 lakh 100. That's all. It will be in and around that area only. Reduce the FMB? No, FMB cannot be reduced. FMB is the market value depending purely on market forces. So tomorrow I can sell it at 3 lakh 100. Now you think of it. I cannot stop the stock market. I cannot bar the sales. I cannot change FMB because FMB is by market forces. But I should ensure people, even if they sell, there is no profit, no loss. There may be very small profit or there may be loss also, who knows. What should I do? Oh. Shares you have, no, government doesn't have shares. What share does the government have? Government may have few shares, but ultimately full market belongs to public. Lakhs and lakhs of shareholders, lakhs and lakhs of traders. The stock market, government can't do those things. They can't control. They can control something whereby your, what do you say, profit will be very minimal or almost nil. When I'm showing you profit very minimal or almost nil, you will be like, hey, leave it man, we'll sell. Let me keep, it's growing anyway. Automatically you'll stop. Can I increase cost of acquisition by indexation? Okay. But still 1 lakh 20 may become 1 lakh 50. That's all. You know indexation, no, it's hardly anything. Market rate of increase will be so crazy. Indexation is just 10% increase. So I can't do that also. Okay, 1 lakh 20 may become 1 lakh 50. That's all. Or 1 lakh 20 may become 1 lakh 80. That's it. Guys, what did he do? No? Said everything till 31st March 2018, January 2018, or everything that happened before that is grandfathered. It's like your tata. You forget about your tata. It's the term used. Grandfathering means what? Everything that happens before 31st March 2018, you have to ignore. What? Even if you purchased it 10 years ago, 15 years ago, 3 years ago, 6 months ago, I should ignore that. What is he trying to tell? You assume as if you bought it yesterday. You assume as if you bought it yesterday. Yesterday, how much you bought it for? Assumption. If I tell that you bought the share yesterday, at what amount would you have bought? FMV. Idli. He made cost only the FMV, guys. Cost only he converted to FMV. Did you buy it at 1,20,000? No. He's saying forget about the past. How much did you buy it for? 3 lakh. Today you want to sell? Yes, sir. How much you'll sell it for? 3 lakh 100 rupees. 3 lakh 100 minus 3 lakh. What is the gain? 100. You want 100 rupees gain? No, nobody will sell. Brilliant. He said whatever happened in the past, ignore. And he's like, whatever is the FMB yesterday, that only is the cost. Deadly. This is called grandfathering provision. Grandfathering provision. He's telling the capital gain from 1,20,000 to 3 lakh will be ignored. It will not be taxed. Forget about it. Going forward, whenever you sell it for, let's say, 3 lakh, 4 lakh, 10,000 you are selling it for. Or let's say 3 lakh 90 you are selling it for. General rule, 3 lakh 90 minus 1 lakh 20 you should do. No. What does Arun Jaitley say? Previous you ignore only. Ignore the past. When you are selling, what will be the rate? 3 lakh 90 minus 3 lakh 90,000. On 90,000 there is still no tax. It should cross 1 lakh, no? Deadly. Brilliant. Use the term grandfathered. Anything before 31st January 2018 will be grandfathered. He brought the cost only till the FMV. Sometimes if the company did not do well, FMV can be 90,000 also. Possible. And that time what to do, we will see. But as of now, generally FMV will be high only, higher than the cost, whatever you bought, unless the company is doing really bad. 5 years ago you bought the shares for 2 lakh. Today that share has become 1 lakh. Then nothing can be done. But generally it will be more only. Generally it is assumed that it is high. If it is less, we'll see what to do. So guys, what did they say? Anything as on 31st March 2018 will be grandfathered. Understood? Grandfathered. What? You should ignore it fully. Isn't it brilliant? Tomorrow when you are selling, take the cost only as 3 lakh. See, you can't touch the selling price, you can't touch the market. What can I touch? Cost. Can you go to him and say, no sir, I only bought it for 1,20,000. Arun Jaitley is telling, no, you didn't buy for 1,20,000. Deemed. How much did you buy it for? 3 lakh. Sir, you are increasing the cost. Yes. Giving you benefit. Later when you are selling it for 3 lakh 90, earlier you would have paid tax. 3 lakh 90 minus 1 lakh 20 should have paid tax. Now no tax. 3 lakh 90 minus 3 lakh. Is it more than 1 lakh? No. No tax. Brilliant. Right? Basically, it's like a discount given. This entire thing is ignored. As if it never happened. As if it never happened. It's like RCB mindset. Every year we'll forget about the past. That's why we'll tell ESCN. Correct? We'll forget about the past. 18 years, forget about the past. This is the first season. Same, our mindset only. So that only you should remember here. So Arun Jaitley is telling, forget about the past. Whatever happened before, forget. This is the real deal. Got it, guys? So now you see that dialogue that he'll tell. You understand, all of you? He will tell that dialogue now.
31st January, attractive even without tax exemption. There is therefore a strong case for bringing the long-term capital gains from listed equities into the tax net. However, recognizing the fact that a vibrant equity market is essential for economic growth, I propose only a modest change in the present regime. I propose to tax such long-term capital gain exceeding rupees 1 lakh at the rate of 10% without allowing the benefit of indexation. However, all gains up to 31st January 2018, that is today, will be grandfathered. For example, if an equity share is purchased 6 months before 31st January 2018 at rupees 100 and the highest price quoted on 31st January 2018 in respect of the share is rupees 120, there will be no tax on the gain of rupees 20 if the share is sold after 1 year from the date of purchase. However, any gain in excess of rupees 20 earned after 31st January 2018 will be taxed at 10% if this share is sold after 31st July 2018.
So guys, what did he say? Same, whatever I told, I took 1 lakh 20 and 3 lakh. He is taking 100 rupees and 120 rupees. That's all. So he is selling whenever you bought it for 100. Today it is 120. Tomorrow you are selling it at 500. Generally you should have tax 500 minus 100. Now he is telling this entire thing will be grandfathered, no tax. Tax will only be 500 minus 120. And into number of shares, if it crosses 1 lakh rupees, only then it will be taxed. Did you understand, guys? This is the concept of grandfathering. Grandfathering, excellent concept. Yes or no? So this is the, anywhere, whenever anyone uses the word grandfathered, it means the old stuff should be ignored. Don't tell your grandfather that old stuff I'll ignore, right? Your old stuff I'll ignore you. No. So that is the grandfathering provision in taxation. So Arun Jaitley, the 112A, got a taxation of how much? 10%? In excess of 1 lakh. In excess of 1 lakh. Very, very good. These were only 3 items. Equity shares, equity oriented units, units of business trust. For these 3 items, he said it is going to be this. Now, this budget 2024, what did Nirmala Madam say? Nirmala Madam said, so what is the thing till now, guys? Very simple. I just wanted to clarify. What is the thing till now? Till 2024, what it was for these 3 items: equity shares, equity oriented units, units of business trust, long-term capital gain in excess of 1 lakh is how much? 10%, no indexation. Correct. Short-term capital gain 15%. This is from 2018 onwards. This is the scene, no change. Okay, till 2024, mind you. This is for those 3 items. For other items, immovable property and all those things, house and all if you sell, then what is it? Long-term capital gain for others. Long-term capital gain, you will get indexation benefit. And the tax rate will be how much? After indexation benefit, 20%. Taxation you take, tax rate 20%. Short-term capital gain is normal slab rate. This is till 2014. In till 2024. In 2024, what did Nirmala Madam say? She said, I'll make it very, very simple. I'll make it very, very simple. She said, let me remove this concept only of indexation everywhere. There is no indexation anywhere. Long-term capital gain more than 1 lakh, no. I will make it more than 1.25 lakh. First change. I'll make you draw a nice chart, don't worry. 1 lakh will now become what? 1.25 lakh. This 10% will now be increased to 12.5%. And this 15% will now be increased to 20%. And LTCG, other cases it was 20% with indexation. No, I will remove indexation. And I will still make it how much? 12.5%. This will be normal slab rate, no change. He made it very simple, without nothing. I don't want anything. All long-term capital gain, how much? 12.5%. But for those three items, I'll give you, instead of 1 lakh benefit, 1.25 lakh benefit. And the same three items, short-term capital gain, it was 15%. Now I'll increase it to 20%. Other cases, short-term capital gain, normal rate. Long-term capital gain in all items, jewelry, house, everything, no indexation. What is the rate? 12.5%. But I told you, people started crying. They cried only for what? House. So for individual and HF, if they are selling a house, I retain the concept of indexation and 20%. That is indexation and 20%. No indexation or 12.5%, whichever is beneficial to the SSE. Only for house, not for what? Other things. Did you understand? I will make you draw a chart, but did you understand the changes? Yes. So we should understand where all it came from. As of now, we are only talking about what? The three items. Other things I will make you draw the chart, don't worry. These three items only, it is important for you to understand. Three items. I'll draw the chart, don't worry. Now, for all these things, what? STT has to be paid, guys. You should have paid STT. Let us now understand chart, explain, then you can copy. Explain first, send to me, and then you can copy. And she brought in one date. Which date was that? 23rd July 2024. Till 22nd July, no tension. From 23rd July only, everything has changed. And unfortunately, your financial year is which one? 24-25. In the 24-25, that date will come. 23rd July. So you need to remember both. If these shares are sold before 23rd July, old rate. On or after 23rd July, new rate. So you need to remember both. And you need to see the question when the shares are sold. Most important. Or no? Yes. So you see, explain. 112A and 111A are those three items. What are those three items? Listed equity shares, equity oriented units, units of business trust. For them, separate section. 112A long term, 111A short term. Till 22nd July 2024, LTCG, how much, guys? 10% in excess of 1 lakh. Do you agree with this? Yes. Who brought this? Arun Jaitley. From 2018 only brought this. Short term capital gain, 15%. From 23rd, all shares, these three items sold on or after 23rd July. 12.5% in excess of 1.25 lakhs. And 15% has increased to 20%. Everybody with me on this? Yes. This for which item? Equity share, equity oriented units, units of business trust, where STT has been paid. It is mandatory to follow this section and there is no indexation. Are you with me on this? So first copy this only. Write down tax rates and write down for 112A, 111A. You do this, you copy this, then I'll scroll down. You can only do this separate chart and this separate chart you can do, don't worry. Like for first chart will be for those three items. 112A, 111A. What are those three items given here? So you can copy this chart first. And then you can create another chart. Go on. Write down. Everyone understood? Once you write this, I'll scroll down, just copy this. You done? Down? Copy. Done, guys? So, other things. Let's see. This is done. Moving on. Now you see this. Other than 112A and 111A. What is other than 112? Other than those things? You see, LTCG 112. Long-term capital gain section is 112. Short-term capital gain, normal tax rates, no change. I told you no change. This one, LTCG till 22nd July, 20% with indexation. From 23rd July, if the asset is immovable property only for resident individual and HF, 20% with indexation, 12.5% no indexation. Did you understand? Yes or no? For other assets like jewelry, etc., 12.5% no indexation. Understanding all of you? We have discussed this. And this is at the option of the SSC only if asset acquired before 23rd July 24 is sold. Guys, if I buy an asset today and sell it after 2 years, will you get indexation? No. This is only, as I told you, because the people who had family property came and cried. Only for them they are telling, if you had purchased the original asset before 23rd July, whenever you want to sell, you can take the indexation benefit only for you. Like today, in 25, if I buy an asset, and 26 I sell an asset, or 28 I sell an asset, will I get indexation? No. I hope it's understandable. It is only for those people who had bought it before 23rd July. Especially these people who have the assets from years and years. For them only, this section is there, not for everyone. Understood, guys? Everyone? No, any doubt? No. Tax rates are very important. Copy. First you do this, then I will, if from 23rd July, I will scroll down this later. Just copy this first. Other than 112A, 111A. Very, very important chart. Very, very important chart for our exam. 100% questions. Can I scroll down? Got it now? Yes. At the option of the SSE, only is the if the asset is acquired before 23rd July is sold. If any asset is acquired after 23rd July, what do you think? Is it allowed or not? In the taxation is never allowed, guys, for those things. Taxation will be allowed. Taxation will not be allowed in those laws. Right? What I want. Apart from that, so earlier, this is proviso to section 1.2. LTC security other than units and HCB. Guys, these are the three items here, no? These are the three items: equity shares, equity oriented units, units of business. What about this? Only equities, equity shares, equity units. What about listed preference shares, listed debentures? Did it come under 112A, 111A? No. 112A, 112 for three items: equity shares, equity oriented units. What about other units? Like, for example, listed debentures. That is why proviso is there. Proviso to section 112. For that, one more example. is the exemption. If land and building is acquired after or on 23rd July 2004 for individual or HF, taxation direct 12.5%, and if land and building by other assets apart from individual or HF, even if it is acquired before 23rd July, then no indexation. Right? This indexation for individual and HF for the assets that they have purchased for 3rd July. For the same individual and HF, he has acquired the asset after 20th taxation. For companies and other firms, etc., who have acquired the asset, whether it is before 23rd July, after 23rd July, no indexation. Understood this one? I told you the logic why that option also came. People started crying. Which people? Family property people. Copy. Going slow in this, that chart, if you then no tension. Copy this example, then we'll come to the proviso. Correct? Done? Now I told you proviso to section 112, which speaks about other items like listed debentures, zero coupon bonds. What will you do for those things? So here you see LTCG on listed security other than the units and zero coupon bonds. For example, listed preference shares, equity shares on which STT is not paid. Guys, that 112A, 11A is for 3 items only on which STT is paid. Can there be anything when STT is not paid? Yes. When will STT be paid? Only if it happens through the stock market. Can I come to you? You already have shares. Can I come to you and purchase from you directly without the stock market route? Yes, why not? I can do it. You know VG Siddhartha of Cafe Coffee Day, he had 3,000 crore worth of shares of Mindtree Consultancy. And he was caught in that scandal where he did not have money in Coffee Day. He wanted to, Income Tax Department took over the shares. That time he sold it to L&T. You know L&T? Today L&T has taken over Mindtree. Larsen and Toubro. So Larsen and Toubro took over this thing, Mindtree. That time, my L&T directly came to Vijay Siddhartha, not stock market route. Directly came to him, open negotiation. Sir, you have 3,000 crore worth of shares, give it to me. Was STT paid on that? No. So what is the taxation for Vijay Siddhartha? Proviso. Proviso to section 112. Guys, 112A, 111A is only for those three items on which STT is paid. What are the three items? Equity shares listed, then equity oriented units, then units of business trust, all listed in the stock exchange on which STT is paid. Those same three items, if STT is not paid, like an open direct deal rather than through stock market deal, then what provision will come? See, till 22nd July 2024, the rule was 10% without indexation, 20% with indexation, whichever is less. For that proviso, special provision was there, 10% without indexation, 20% with indexation, whichever is less. But anyway, from 23rd July, answer, 12.5%, no indexation. Going step by step. First, we discuss three items with STT. Then I discuss other items like jewelry, house and all that. Only house there is a change. Jewelry and all, no change. No 23rd July for jewelry. How much is it? Correct? Basically, for that normal tax rate. No change only, not 20. Normal tax rate. 20% is only for what? 111A guys. That short term capital gain. And for house, of course, it is 20%. Long term also. STCG, there is no change in Finance Act 24. It is normal tax rates. But anyway, here, this one, LTCG on listed security other than units and all, from 23rd July, very simple answer. 12.5%. Copy. Guys, are you understanding, all of you? I'm going slow, then I'll give you 5 minutes to go through everything. Don't worry. These are very, very important. This is very important class today. Tax rates. Most important. Your entire capital gain calculation is based on this chart actually. Done. Right. Now, one more down. Guys, what about, see, this has listed preference shares, equity share on which STT is not paid, listed bonds, debentures, etc. What about market linked debenture? Guys, for market debenture, proviso to 1 will not come. Section which was inserted in Finance Act 23 will come. That is called 50AA. Section called 50AA will be applicable. So this market linked debentures will also include unlisted bonds, unlisted debentures. So here I have written here, you see, listed bonds, listed debentures. Listed debentures is nothing but market linked debentures. Everything is linked to the market. This will not come under 112. Where will it come? New section 50AA. In the exam, they ask you anything about market linked debentures or unlisted bonds, unlisted debentures. It will not come under proviso to 112, it will come under 50AA. Right? What is 50AA? See. Market linked debentures, listed bonds, unlisted debentures. Guys, listed bonds, listed bonds, where will it come? 112. Proviso to 112. Listed debentures and unlisted debentures will come under 50AA. Listed preference shares, equity shares on which STT is not paid, listed bonds, all that will come under proviso to 112. 50AA only covers what? Market linked debentures, unlisted bonds, unlisted debentures, and certain specified funds. You will see that. So the logic of this section I will explain. This came 1 year before, that is not Finance Act 24, it came in Finance Act 23. I'll explain the logic. See, what is the logic? Did you write this down? Write it down first, write it down. After that I'll explain the logic, then you will understand what I am trying to tell. Done. So you see, investment guys, any investment, no? It's just a logic. Logic I'm telling. If I invest in equity, I already know now, listed equity, more than 12 months LTCG, less than 12 months STCG, 112A, 111, I've already seen 12.5% in excess of 1.2 lakhs, 20% from 23rd July. That's for which one? 112A and 111A. We know or not? Yes. Fixed deposits and savings bank account, it is always slab rate. But with mutual fund and other things, if it was an equity fund, that is equity oriented units, obviously this will come under this only, no? The left hand side, it will come under the left hand side. Equity oriented units, no change. It will come under 112A, 111A. But debt and hybrid funds, that include what? Market linked debentures. Debt and hybrid funds which include market linked debentures. What is debt and hybrid fund? One is normal debt fund where they will invest only in debt. One is hybrid fund. In hybrid fund they will invest both in debt and equity. So in that, no, generally, which will include market linked debentures, if it is less than 24 months earlier, because market linked debenture will come under the 24 months category or 12 months category? 24 months. Because 12 months category is only listed. If you see the chart, type A, type B. Market linked debentures will come under type B only. So if it is less than 24 months, it was always STC slab rate. But if it is more than 24 months, no, again, we had to go through that proviso and all those things. But now, guys, you can ignore all these things. Now, Finance Act 23 says market linked debentures under 50AA, whether it is short term or long term, everything is deemed to be short term capital gain. Deadly point. They want to bring this debt and hybrid equal to fixed deposit and savings bank. Guys, earlier, no, this debt and hybrid, they used to give a benefit of indexation, etc. Government is telling, in a debt fund and hybrid fund, tell me one thing, risk is high or risk is low? Low. Equity fund, risk is high or low? High. Equity fund, since the risk is high, tax should be low or high? Low. So since equity fund risk is high, tax is low, 12.5% and all those things. 20% also is less only. Because the risk is high, tax is low. Fixed deposit and savings bank account, risk is high or risk is low? Low. Tax will be high or low? High. That's why slab rate. Slab rate will be highest slab rate, 30%. But this was always a problem with debt and hybrid funds. With debt and hybrid funds, even though the risk was less, tax also was less. Tax earlier used to be under which one? 10%, 20% with indexation and all that. So now government is telling no. Whether it is short term or long term, everything is under what rate? Slab rate. In Finance Act 23, market linked debentures, everything is under slab rate, 50AA. Everything is deemed to be what? Short term capital gain. Everything is deemed to be short term capital gain. Got it? Understood all of you? Yes or no? Because of that only, Nirmala madam was confused. Debt fund, hybrid fund, they are all taking tax benefits for long term. They are taking indexation and all those because it was all part of this 112, where this was the provision before, 10% without indexation, 20% with indexation. And now if you make it, it is 12.5%. Why should I give benefit of 12.5% lesser taxation for you when you are not taking any risk? In a debt fund and hybrid fund, there is no risk. I will not allow you to take no risk. With its less risk, pay high tax. So what did they make now? Whether it is long term or short term, I don't care. It is deemed to be short term. What is the rate? Slab rate. That's the only change. There's no other extra rate. They are telling everything is slab rate. For which one? Market linked debentures, unlisted bond, unlisted debentures, and also a specified fund whereby more than some percentage is only debt. Risk is less. Now, since risk is less, tax is more. Did you understand logic? Yes. Now you can copy. So 12.5% also is not there now. Is Finance Act 23, market linked debentures, everything is deemed to be short term. But before that, guys, you can just write down what all does 50AA cover. So 50AA covers market linked debentures can be acquired anytime, and it covers specified mutual fund to be acquired after 1/4/2023. After 1/4/2023. Just write down, I'll dictate. Just write down these two things. What is 50AA? It covers two things. Market linked debentures. Market linked debentures. Market linked debentures. 50AA. Market linked debentures can be acquired anytime. Specified mutual fund. Specified mutual fund has to be acquired after 1/4/2023. Specified mutual fund has to be acquired after 1/4/2023. Guys, what is specified mutual fund? What is specified mutual? You can just write down investment in debt. I will not give you the chart now. Just write down investment in debt. Investment in debt. Investment in debt is greater than or equal to 65%. Investment in debt. Investment in debt greater than or equal to much? 65%. Investment in debt is greater than or equal to how much? 65%. That's it. So all market linked debentures. Then in 50AA, two other things are added now, no? What are they? Listed debentures, unlisted bonds. Everything is covered in 50AA. Whenever they ask you 50AA, it has three things. Listed debenture, unlisted bonds. Four things. Unlisted debenture, unlisted bonds. Then market linked debentures. Lastly, specified mutual fund. What is specified mutual fund? Greater than or equal to 65% investment will be in debt. Will be in debt. So for that, what will be the tax rate, guys? For 50AA, all these items, whether it is long term or short term, everything is deemed to be short term. And what is the rate? Slab rate. It is deemed to be short term capital gain. There is no long term capital gain here. It is deemed to be short term capital gain. And it is how much? Slab rate. Structure you write down. We done? Guys, very simple. For more than 24 months, always what rate? Slab rate. Charts are all extremely important to a total picture. So overall, what is it now? One is your 112A, 111A that cannot be touched. What are that? Equity oriented units, equity shares, and business trust, which is listed and on which STT is paid. On which STT is not paid, this will come. This is my proviso. For which STT is not paid, proviso will come. What is it now? From 123/7/2024, no mercy. It is 12.5%, no indexation. And for all short-term things, guys, slab rate. And for house, it is 12.5%. Only for jewelry and all, it is 12.5%. For house, it is how much? 20% or 12.5%, whichever is beneficial, right? Apart from that, there is this concept called market-linked debenture. It is only 5 items: listed debenture, unlisted bond, 4 items, market-linked debentures, and then specified mutual fund. That's it. Correct now? All. Now my question to you is, when I am doing this house thing, I told you for house thing, is 20% with indexation, 12.5% no indexation. 1980, I bought a house for 1 lakh. Today it is 1 crore. 1980, I bought a house for 1 lakh. Today it is 1 crore. On 1st April 2001, FMV is 10 lakh. FMV is 10 lakh. 1980, I bought a house for 1 lakh. 1/4/2001, FMV is lakh. Today I sold it for 1 crore. Today means 2025, I am selling it for 1 crore. Old provision, what was it? Cost or FMV, whichever is high, 10 lakh. So 1 crore minus, now that 10 lakh, I have to give indexation from 2001 to today. 10 lakh into 363 by 100, 36 lakh 30,000 I will do. 1 crore minus 36 lakh 30,000 with taxation, and after that 20%. This we know. What about the other side? 12.5%, no indexation. Is it 1 crore minus 1 lakh or 1 crore minus 10 lakh was the question which people asked Nirmala madam. Madam, I understand there is no indexation, agreed, but is it 1 crore minus 1 lakh original cost, or will I get the FMV benefit as on 1/4/2001? Because Nirmala madam said there is no indexation. There is no indexation, what is it? Original cost minus, selling price minus cost. What is selling price? 1 crore. Cost. Is it 1 lakh as per 1980, or should I take cost as on 1/4/2001? Is the problem. Good question, no? What do you think? So is it 1 crore minus 1 lakh into 12.5%? Or is it 1 crore minus 10 lakh into 12.5%? So, said this dialogue. It was a clarification given by department later because people were really getting confused. IT department has clarified that FMB benefit of 1/4/2001 is available for both the options. Cost of acquisition 1990, 5 lakh. 1/4/2001 FMB, 10 lakh. Sold on 24/7/2024, 1 crore. With indexation, FEOC 1 crore less index cost of acquisition 10 lakh into 363 by 100, 36.3 lakh. LTCG 63.7. Tax at 20%, 12 lakh 74,000. But if it is without indexation, FEOC 1 crore. Cost of acquisition is not 1 lakh. It is how much? 10 lakh. LTCG will be 90 lakh. What is the tax? 12.5%, 11 lakh 20. Which is better? 12.5% only is better always. Of the cases. So that FMV benefit is available or not? Yes. Copy. A break. Alright guys, so before the break we had done all these things. Again to quickly revise, for tax rates there are, I can say, three types of different things, or let's say four types. First one is those three items: equity shares, equity oriented units, units of business trust, for which STT is paid. For that we have 112A, 111A. So there STCG was 15, it has become 20, whereas the 10% has actually increased to 12.5%. This is the only place where there has increased, whereas in other things it has decreased only. Second is other than 112A, 111A case where the same shares etc. for which STT is not paid. Now here it is divided into proviso to 112 and also 50AA. 50AA has, we'll come to that, but proviso to 112 says what? Earlier it was 10% without indexation, 20% with indexation. Now it is 12.5%, no indexation for long term. But short term anyway, everything is slab rate. Then jewelry, house and all, jewelry etc. if I sell long term, it is 12.5%. But house if I sell, it is 20% with indexation, 12.5% without indexation if the house was purchased before 23rd July. It is only for individual HF. For companies and all, there is no benefit like this. It is 12.5% only. Coming to market linked debentures, there are the 50AA, four items. One is market linked debentures, one is specified mutual fund, unlisted debentures, unlisted bonds. For all these things, it is slab rate only, deemed to be short term capital gain, the tax rate. Now, my next question to you. Bonus was issued by the company in 2010. Bonus was issued in 2010. Bonus shares are free, or what is the cost of acquisition of bonus? Nil. Perfect. Anything after 141? 14 when? 2001. After that it is nil. Before that it is cost or FMA, whichever is high, which is illogical. Anything after 2001, nil. My question to you, next question is, company issued bonus shares in 2010. What is the cost of acquisition? Nil. You are now selling it in 2020. Let's say 2024 only you are selling, no problem. What you are selling? Cost of acquisition, nil. 2025 you are selling for 10 lakhs. So now when you are doing the calculation, is it 10 lakh minus 0 into 12.5%? Or is it 10 lakh minus FMV as on 31/1/2018? You understanding my question? Is it 10 lakh minus 0? Or is it 10 lakh minus FMV as on 31/1/2018? What did I tell you? Anything as per 31/1/2018 is grandfathered. Anything before 31st March 2018, 31st January 2018 is grandfathered. So I am asking you, the cost was 0, but on 31/1/2018, FMV, let's say, is 5 lakhs. Now I am selling the asset for 10 lakh. Is it 10 lakh minus 0 or 10 lakh minus 5 lakh? 10 lakh minus 5 lakh or 10 lakh minus 0? 10 lakh minus 5 lakh. You go to bonus. I told you, no, one day we'll connect. Go to bonus now. Go to bonus. 3 lines you have written. Now you will understand. Bonus share. I told you we will connect it later. Blindly copy. 2 days ago only I told. Mark this and keep, I told. 3 lines are there. What are the 3 lines? Yes. Section 112A. That is what we did now. Section 112A applies. And the FMV benefit of 31/1/2018 shall apply. Correct? In my example, the cost of acquisition was nil. When did I get the bonus shares? 2010. When did I sell the bonus shares? 2025 for 10 lakh. It is not 10 lakh minus 0. It is 10 lakh minus FMV as on 31/1/2018. 10 lakh minus 5 lakh into 12.5% I should do. So the FMV benefit is applicable for all shares including bonus shares. That FMV is actually a benefit that they're giving you. Grandfathered, no tax. Arun Jaitley gave a simple example. 100 rupees became 120 rupees. Tomorrow you are selling it at 180 rupees. So you will do 180 minus 120 or 180 minus 100? 180 minus 120. Minus 120. What happened? Who are they? Oh, okay. So 180 minus 120 or 180 minus 100? 180 minus 120. So that 100 to 120 will be grandfathered. Similarly, bonus also, it is not 10 lakh minus 0. It's 10 lakh minus 5 lakh. Because from 2010 to 2018, that amount of increase will be grandfathered. It's the beauty of this section. Hope you understood, right? Now I told you, if I purchased it in 2010, assume for 5 lakh rupees, but on 31/1/2018, there is a fall in the market. That company is not doing well. So market value in 2010 only was higher. In 2010, I bought it for 5 lakh. In 2018, it is becoming 3 lakh. So what should I do? Whichever is higher, whichever is less. If I am selling at that lesser rate, so what should I do? Whichever is higher, whichever is less. Should I do FMV? What if I am selling it at less? Sorry? Okay. See, the cost of acquisition is, assume 1 lakh. Okay. Cost of acquisition is 1 lakh. FMV as on 31/1/2018 is 80,000. And I am selling it 2025 for 20,000. Company full gone. Company is fully gone. Cost of acquisition is 1 lakh. FMV as on 31/1/2018 is 80,000. Sale value 20,000. Company is fully wiped out. Thing can be done. Now, when I am doing this, what should I do? Okay, FMV as FVOC I should take. Should I take 20,000 or should I take 80,000? Or this also can happen. In 2018, assume it was 2,80,000. In 2018, it was doing really well. 2018, that the company was doing really well, let's say 2,80,000. Probably it was doing. Then the decline started, unfortunately. And as of today, in 2025, it is 20,000. So what would be my cost of acquisition? Selling price 20, no tension. My cost of acquisition, if I take 2,80,000 or 1 lakh will I take? Grandfathering provisions will assume, so let's take 2,80,000. If I take 2,80,000, what is the selling price? 20. Minus cost 2,80,000. Loss 2,60,000. Arun Jaitley was very, very, very smart. This he didn't tell in the budget speech. He didn't tell. He made one formula for cost of acquisition. That cost of acquisition ultimately, you only tell me guys, according to you, selling price 20,000, selling price 20,000. Cost of acquisition, is it 2,80,000 or should it be 1 lakh? The cost of acquisition, I take this, no, loss will be 2,60,000. This loss can be used to set off in the future. But if I take the actual cost, how much I purchased it for, then it will be 80,000. You are finance minister. You want to give more loss or less loss? Less loss. If you give more loss, then you will not, that will be set off against profit and you will get less tax. So rather than he told grandfather and all those things, but what is the ultimate thing? Said it should ideally be 1 lakh. To make it 1 lakh, what did he say? Said first compare fair market value or sale price, whichever is less. Is less 20. Then do cost of acquisition or this one, whichever is more, 1 lakh. Any example you take, this will work. What did he say first? Selling price or FMV, whichever is less you take first. And from that cost and this comparison you do, whichever is high. It is high, 1 lakh. You take any example, 2,80,000 is sold for 6,20,000, assume. What is the cost? FMV or sale, whichever is less. And cost or FMV, whichever is high. 2,80,000 is correct only, no? 6,20,000 minus 2,80,000, that's correct. You make it 1,20,000. FMV or sale, whichever is less, 1,20,000. This or this, whichever is high, 1,20,000. So 1,20,000 minus 1,20,000, 0. Beautiful formula. You cannot cheat only. You take anything, FMB and sale, whichever is less will be the cost, deemed it is. And that amount and cost, whichever is high. So it was 1 lakh when I purchased. In 2018, the company was doing really well, 2,80,000. But the sale price is 1,20,000. What's the formula? Sale or FMB, whichever is less, which is less, 1,20,000. Then 1,20,000 or cost of acquisition, whichever is high, 1,20,000. So what is my capital gain? 1,20,000 minus 1,20,000, 0. If I had not used this, if I had simply blindly take FMB, then I would have done what? 1,20,000 minus 2,80,000, 1,60,000 as loss. Which is better, 1,60,000 as loss or 0? 0. For income tax department, 0 only is better. So he came out with a wonderful formula which can be used for anything. So now tell me, cost of acquisition is not FMV, that he told in budget speech. Till now whatever I was explaining was as per budget speech. But what is the law? Cost of acquisition will be FMV as on 1/4/2018 or sale value, whichever is high, and whichever is less. And from there, whatever I get, that or cost of acquisition, whichever is high. So even though he explained it in a very nice way, you cannot take that. Do you think he can explain that to those more than half fellows won't even understand what he's telling? Rahul Gandhi sitting is like, when will mummy come? I want to go out with mummy. He's thinking like that in that video. Correct? Nobody will understand, guys. Can't sit and make it complicated. In the budget speech, if he makes it complicated, general public, what will they tell? So he simply put one example, 100 became 120, then 120 sold it later, but that 100 to 120, that will not be taxed. He closed it there only. But it's not so simple. This is the formula. Right? FMV or sale, whichever is less. That whatever is less or cost, whichever is high, that will be the cost of acquisition. Got it? Write down, guys. Write down this. Section 55, cost of acquisition. Copy. Done? By step. Now bonus issue. The bonus ka chart. Chart. How will it look? Before 1/4/2001, it will be what? Cost or FMV as on 1/4/2001, whichever is high. After 1/4/2001, for 112A cases. What is 112A cases? Equity share or units listed on which STT is paid. Section 55 will come. FMV benefit as on 31/1/2018 will be available. If it is a listed case. What if I give for unlisted company bonus? Then cost of acquisition will be nil only. Why will you take FMV as on 31/1/2018? Correct, no guys? Bonus share of a listed company if you receive, then you will get the benefit of 31/1/2018. If I am a private KSA private limited issues bonus shares, you will check FMV of 31/1/2018? No. What will be the cost of acquisition? Nil. So you should see in the question whether they are asking listed company or unlisted company. For listed company, what is the unit? What is the thing? It is FMB benefit as on 31/1/2018 is available. Or no? Copy guys, copy. The final chart. You should whether it is which one? FMA benefit as on 31 available for what? Bonus issue. Listed 112A cases. Now guys, we are told no that FMV as on 31/1/2018. Next question to you is, how will I compute that 31/1? He said no 31/1/2018. If it is listed both in NSE and BSE, what will you do? Will you take the highest price, lowest price, average price? That is the question. So that sometimes I'll ask you in the exam, 31/1/2018, highest price was this, lowest price was this. Did you take average or highest or lowest? And what if it is in more than one stock exchange? If it is only listed in BSE, okay. If it's only listed in NSE, okay. What if it is listed in both the things? What will you take? So next heading, write down FMV, calculation of FMV as on 31/1/2018. So how much is it? Listed shares or units, highest price quoted on 31/1/2018. For unlisted, explain and then you can copy. For unlisted guys, it is something called as, if it is units, okay. For units, it is called net asset value as on 31/1/2018. Units means what? What are units? If I invest in a mutual fund, all of us pump in money to the mutual fund. That mutual fund will invest in various companies and they will give you something called as units. The unit value will be based on the investment. If the market is high, net asset value will be high. If the market is low, net asset value will be low. So if I am buying or selling units in the market, then the FMV will be the NAV. What is NAV? Net asset value as on 31/1/2018. But if I am dealing in unlisted shares, then think about it guys, cost of acquisition I purchased in 2010 into cost inflation index of 1718 divided by cost inflation index of 2010. Whatever you have been doing, that's how you should calculate the FMV for unlisted. For listed, I don't have to use this index. Why? Because for listed, it's already listed in the market. I'll know the market price. For unlisted, I should do these things. Cost of acquisition into index of previous year 1718 divided by index of the year of acquisition. Right? So calculation of FMV as on 31/1/2018, listed shares or units, highest price quoted as on 31/1/2018. For unlisted, units and shares. Units how much? NAV as on 31/1/2018. And for shares, it is cost of acquisition into index of 1718 divided by index of year of acquisition. Here, so it's simple. This is for FMV. They'll only ask you highest price quoted on 31/1/2018. It is quoted on NSE also, BSE also. What should I take? Highest. Whichever is highest, that I should take. Similarly, if it is units, then NAV. They'll only give in the question NAV as on 31/1/2018 was so and so. And for unlisted, you should simply do a indexation. Cost of acquisition into 1718 divided by whenever you acquired it. Okay, copy down. This is the calculation of FMV as on 31/1/2018. Calculation of FMV as on 31/1/2018. Done. Same thing is given. Things. Just follow my chart. Whatever we did, follow that, guys. Blindly, everything is covered there. So now, after that tax rate, will you add cess, surcharge and all? Obviously, that is what 12.5% is normal. After that, you will add surcharge wherever needed. The income is more than 1 crore, all that. Then you will add cess of 4%, all that will normal. Now, you write down for resident division. Next point, whenever for resident, individual and HF, resident, HF and individual, long term capital gains under 112A, long term capital gains under 112A shall be reduced by shall be reduced by the unexhausted basic exemption limit. Be reduced by the unexhausted basic exemption limit. The balance will be taxed at 12.5%. Balance will be taxed at 12.5. In page number 8.47, please make the change. It is 12.5%. Right. So, what do you mean by that, guys? You check it. Resident age 65 years derives taxable pension and interest income of 2 lakh and also derives long term capital gain of 5 lakh on transfer of equity shares covered under 112A. This case, first of all, I should do the basic exemption limit of 3 lakh. Basic exemption limit of 3 lakh. First, I will exhaust it against interest income. Correct? So 3 lakh minus 2 lakh, 1 lakh. What is the unexhausted portion? 1 lakh. So that 1 lakh, manner of adjusting that 1 lakh. First, from this balance of 5 lakh, going to subtract 1 lakh. Come from long term capital gains, 5 lakh. Less unexhausted basic exemption limit, 1 lakh. Balance capital gain under 112A, 4 lakh. So tax up to 1 lakh, nil. Tax on the balance income, this much. This is under till 22nd July. After 23rd July, how does it change? Yes. Balance, unexhausted balance is how much? 4 lakh. Total capital gain, 5 lakh. Unexhausted basic exemption limit, 1 lakh. How is it unexhausted, guys? 3 minus 2. What is my basic exemption limit? What is my basic exemption limit? 3 lakhs. So what is the, income, which is other income, 2 lakh. 3 minus 2. What is my unexhausted basic exemption limit? 1 lakh. That 1 lakh will be subtracted from my capital gain under long term. 5 lakh minus 1 lakh, 4 lakh. And in this 4 lakh, up to 1 lakh 25,000 nil. So no. Basically, I am getting two exemption limits. One is that unexhausted portion of 1 lakh. One more is our normal exemption limit of 1.25 lakh. So 4 lakh minus 1.25 lakh is how much? 2 lakh 75,000. On this 2 lakh 75,000, what rate? 12.5%. On 2 lakh 75,000, I'm going to get how much, guys? 12.5%. This whatever rate. How much will it come up to? 34,000. So because of this new tax rate, no, for 1 month to it has increased. Because old rate was 10%, new rate is 12.5%. So if you sell it before 22nd July, 23rd July, it will be 30,000. If you sell it on or after 23rd July, tax will be 34,375. Did you understand? This is the concept of using unexhausted basic exemption limit. First, you should use the basic exemption limit for outside things. In the unexhausted portion, you can use for 112A. That is the unexhausted portion. Easy? Yes. Guys, this is only for non-resident individual. Sorry, only for resident individual. For NRI, nothing. NRI, you cannot use what? Such basic limit you cannot use. Take this. Point number D, you read on your own. It's already given resident, which means non-resident not applicable. Read the next point and tell me if you have understood or not. Point number D, please read. Got it? This is the old rebate, guys. Old rebate is not available for LTCG. Now anyway, old rebate will you do? No. It's anyway the new rebate. New rebate anyway, covered or not covered, we'll see that later. Cost of acquisition, we have already seen. Problem. One more thing, guys. What would be the cost of acquisition if is not listed as on 31/1/2018, but as of today when you are selling it, it is listed. What to do? For example, Nykaa, Paytm, Zomato, Swiggy. In 2018, was it listed? No. But in 2025, is it listed? Yes. When I'm selling it today, I should subtract cost as on 31/1/2018. I don't know what was the FMV because it was not listed. What to do? It is treated as same as unlisted only. What will you do? Cost of index, cost of acquisition I should do. So in that you had written for this thing, no? You had written for unlisted that indexation here. You can also write here same treatment for company listed on 31/1/2008, but listed on of same treatment for companies unlisted on 31/1/2018 but listed as on the date of transfer. Same treatment for companies unlisted on 31/1/2018 but listed as on which day? Date of transfer. For this capital gains on amalgamation, this liquidation, for that I have to see IFOS. Later we'll discuss this. There's no point, you'll not understand. You have to do income from other sources and then come back to this. Next for what do you say? Amalgamation, etc. That is always a transfer, all that we have seen. Cost of acquisition, now to do couple of sums we'll solve, guys. I'll solve couple of sums to understand. You see, you can check here only, no problem. Come to page. There are still a couple of things that I have to do and then we can solve sums. 8.55. Policy under ULIP. Unit linked insurance policy. We have discussed, is it a capital asset or not capital asset? Any ULIP for which premium is more than 2,50,000 is a capital asset. So policy should be after 1st February 2021, premium amount is more than 2,50,000 rupees. That's it. ZCB also we have seen any maturity should go with this section. And now earlier it was 10% and 20%. Now how much? After 23rd July, how much is it? 23rd July it is 12.5%. I told you, no, ZCB I issue at 70, redeem at 30. For that, at 100, at 30 rupees, what will be the tax? Long term, 12.5%. Short term is slab rate. Amalgamation. Is amalgamation transfer? No, we have seen no transactions which are not transfer. Capital gains will arise only when the shares are transferred by the shareholder. So guys, when one company is getting amalgamated on another company, I am getting new shares in the company. Is it a transfer? No. But when that shareholder is selling the shares, let's say I held shares company A. I held shares in Vodafone the year 2021. Vodafone became Vodafone Idea. Let's say in 2023. That's an assumption. I am selling the shares in 2026. According to you, my cost of acquisition will be and period of holding will be from 21 or 23? Gift is not a transfer, amalgamation is not a transfer, demerger is not a transfer, everything will come from the previous owner or previous company. Period of holding will come from 21. Cost will come from 21. Everything will come from where? 21. You see, cost of acquisition of shares in amalgamated companies, cost of acquisition of shares in the amalgamating company, same. Period of holding is includes the period for which shares were held in the old company, everything. There is no capital gain on transfer of capital asset by amalgamating company to amalgamated company. All assets of the amalgamating company will become property of the amalgamated company. Period of holding will include from before, from the amalgamating company. Same concept for demerger also. But in demerger, no. There will be one company with net assets 1000 rupees, that is demerged into two companies. This company with net asset 200, this company with net asset 800. According to you, and for this, no, I had shares worth 1 lakh. I had shares worth 1 lakh in the demerged company. If they ask you what is the cost of acquisition of the resulting company, shares in resulting company, how will you calculate? I repeat, in the demerged company, net asset was 1000 rupees. Let me say 10 lakh rupees. Net asset was 10 lakh rupees. In the resulting company, one net asset was 2 lakh, in the other net asset was what? 8 lakh. Basically, a 10 lakh was split into 2 lakh and 8 lakh. In the main company, initially, I had the rate, I had how much? I had the cost, how much? 1 lakh. That is in the demerged company. If they ask me to calculate cost of acquisition of shares of the resulting company, this is a resulting company. How will I calculate? Proportionate. For 10 lakh net asset, my cost was 1 lakh. For 2 lakh, it is how much? That's all. What is there in that? Common sense. Here, cost of shares in demerged company, 1 lakh. Net book value of assets transferred in demerger, 2 lakh. Net worth of the demerged company before demerger, 10 lakh. So 1 lakh into 2 lakh by 10 lakh. Same, no? No change. So because in demerger, amalgamation, nothing will change. Everything is the same only. Absolutely no change in any of those things, guys. Same it is. Liquidation part we will see later. Liquidation full we will see later. This is in after IFOS. Buyback we will see later. IFOS. This section 50 already discussed in PGBP. What are the two conditions when block of assets will become capital gain? First of all, there should be some value in the block and at least one asset must be there, then it will remain in the block. Otherwise, it will become capital gain. Already discussed with example. All this we have already seen in PGBP. I'm just repeating this. Entire thing we have seen in PGBP, including these cases. Same thing was there, copy paste. Right? So, couple of other points, then this chapter is over. We have to do sums, but sums we have not done. Tax rate sums are very important. We have to do tax rate sums. We'll do few. Over. What is there in capital gain? Easy, difficult. Tax rate, once you start doing sums, we will get the hang of it. We will do sums, don't worry. Okay, guys. So now let's two more other points in this, which you can just copy down as an observation. It will help you. See. General rule, guys. General rule. 41. I'll explain and then you can copy. General rule as per 45(1) is like a revision. Year of taxation is equal to what? Year of transfer. That AC will die. The way how much you guys press. Keep it at one temperature, no? Some 25. Someone will make it 30. Someone will make 40. If you're feeling cold, sit in a place which is away from this. That's all. So 45(1) year of, they will come and put a box soon. Actually, I'm not joking. They've already ordered for a box. They'll put one temperature and lock it off, and you die. Right? So if you're feeling cold, temperature means they'll not put 18. They'll put a reasonable temperature. 24, 25 is good enough. That's room temperature. So then you have to do musical chair. Now it's cold. Then you can't open that. They'll lock it off. Yes. So 45(1). Year of taxation is equal to year of transfer. Then long-term capital asset taxation is till which day? 23rd July 2020. For after that, no indexation. Exception are these things. What are these exception? Year of taxability is some other year. 4 items we know already discussed, but still revision. 45(1)(a). Destruction of capital asset. It is taxable in the year of receipt of insurance claim. 45(2), conversion of capital asset into stock in trade. Whenever the stock in trade is sold. 45(5), compulsory acquisition, when the compensation was first received. Joint development, 45(5)(a), when you receive the completion certificate in part or whole. Taxation, first proviso to 48. Here, these are no indexation in these cases. In these cases, there is no indexation. 8 cases, 9th one you leave. 8 cases, there is no indexation. These are the 8 cases. This is prior to 23rd July. After 23rd July, anyway, no indexation. Prior to 23rd July, these cases, no indexation. First proviso to 48. Remember TTBR, TTSR case. Was there indexation? No. Bonds, debentures. Remember, is there indexation? You are written on special provision. No indexation for bonds or debentures till 22nd July. Except 2. Capital index bonds, all that you had written. Third one, slump sale. Is there any indexation? No, because you use the net worth concept. Next, goodwill, self-generated asset. Is there indexation? Cost only is nil. What indexation? Bonus shares. Is there indexation? No. Where will you get indexation? Except FMV benefit as on 31/1/2018. 112(a), no indexation. 112, option to take 10% without indexation till 22nd July. LTCG of unlisted securities also, in case of non-resident or foreign company, 10% without indexation till 22nd July. After 22nd July, nothing. This entire chart is waste. Because for everything there is no indexation. Only indexation is for residential house property, individual or HF. Here, this chart, copy guys. This is just for your knowledge chart, revision chart. After revision chart, we will do sums. Write this, then I will roll down. Write the left hand part, guys. Left hand part you write down. Indexation also you write down, and then I will scroll down. Till 7 is there, 8 and 9 I will scroll down later. Boyfriend is calling. Fortunately. part is P part. These cases will be the 9 cases where ask about FMB. (45) 1A, destruction of the asset. If you remember, if asset is given as a replacement instead of money, correct? Asset is destroyed, new asset is brought in. So what is the FEOC? FMB. FMB, insurance money, instead of money they'll give asset. What is the value? FMB of the asset. 45(2), capital asset converted to stock in trade. FMB on the date of conversion will be FEOC. Stock in trade converted to capital asset, reverse. FMB on the date of conversion will be PGBP, and the same will be taken into block. 45 for dissolution, we will discuss in final. 46 to dividend, we will, TBD means to be discussed in IFOS. I told you, we will discuss the dividend part later. 50 CA, sale of unquoted shares. Remember, unquoted shares. Unquoted shares means what? Unlisted shares. What should I take? FMB. As per 11 UAE, they'll give in the question I already told you. Then 50D, selling price, if it is not determinable, then FMB of the asset received or exchanged. Then all shares, bonds, etc., that is assets before 1/4/2001, I should take FMB as on 1/4/2001. And special provision of section 55, shares or bonus shares as per 112A, FMV as on 31st January 2018 will be taken. These are the 9 cases in the entire Income Tax Act which requires, in capital gain chapter, which requires FMV. Just for your revision, copy. After copying, take a break. The sums. Start the Q&A. So open the question and answer booklet, the new one. Come to capital gain, page 105, guys. 105, capital gain. Question 3. Did you get it? Page 105. Maybe it's different here. Okay. Hold. 150. I have the same question. No, because your book, no, it has different things. It has MCQ separately. Just doing the Q&A, whichever page it is. 50. Question 2 has IFOS, so we cannot do that now. Question 3. Question 1 you can do, no problem. Question 3 you check. Chinmay converts his plot of land purchased in July 2004 for 80,000 rupees, converts to stock and trade on 31st March 2024. Tell me, conversion of capital asset into stock in trade, is it a transfer? Yes. So you should. But when is the taxation happening? Whenever that stock in trade is sold. The fair market value as on 31/3/2024 was 3 lakh. Do you have anything to do with FMB? Yes. Why? Because on the date of conversion, the FMB should be taken into account as the FEOC. The stock in trade was sold for 3,25,000 in the month of January 25. What is this? Which one? PGBP or capital gain? PGBP. So 3,25,000 minus 3 lakh will be my PGBP. 3,25,000 minus 3 lakh will be my PGBP. On the other hand, capital gain, cost of acquisition 80,000. FEOC is nothing but the FMV as on the date of conversion. How much? 3 lakh. Correct. So cost of acquisition It got converted on 31st March 24. Indexation is allowed or not? Yes. Indexation will be 363 or 348? Yes, 363 is 24.25. 348 is 23.24. I should take 348 or 363? 348. Very good. 348 by 113. What will be the cost of acquisition? 80,000 into 348 by 113. 246 whatever. And what will be the sale consideration? 3 lakh. PGBP will be 3 lakh 25 minus 3 lakh 25,000. This one will be FMV as on the date of conversion. Index cost of acquisition 80,000 into 348 by 113. So capital gain will be 53,628 plus PGBP will be 25,000. Overall income will be 78,628. You should write notes. What notes will you write? Note number 1. Transfer will be conversion of capital asset into stock in trade, but taxation is postponed to the year of sale of that particular product. And the date of conversion, FME will be taken to be the FEOC. All these 3-4 points you should write. The same points are given here. These points you can write it in the as pointers. You can write it after the answer or before the answer, but notes are most important while writing the answer. If you miss out on the notes, you will miss out on majority of the marks. You should write the notes. Okay. Question number 4. MTP 4 marks and also asked in October 2021. No, your mock test paper of ICI. Mr. Charan purchased 1200 shares of A Limited at 130 rupees per share on 26/2/1979. Very, very old. A Limited issued 600 bonus shares on 22/2005. FMB of the shares at Mumbai Stock Exchange as on 1/4/2001 was 900 and 2000 as on 31/1/2018. What will I do, guys? What will I do? I should take the FMB as on 31/1/2018. Both for the bonus as well as original shares. Will you get for the bonus benefit as on 31/1/2018? Yes. On 7/7/2024, Charan sold all the 1,800 shares at 2,400 rupees per share. How is 1,800 shares, how did it come? 1,200 and 600. 1,200 and 600. So what is the full value of consideration? Be wrong actually, but calculate and tell me. $43 lakh. Again, this both are into different 43 lakh. Typing them gold medal. Next guys. Cost higher of 1 and 2 below. Nil being cost of acquisition for bonus, isn't it nil? Yes. This is for bonus shares. And what will be the FMV as on 31/1/2018? For bonus, it is how much? Everything, 2000 rupees per share. Correct? 2000 rupees per share. 2000 into how much? 1000 into 1800. Then here 36 lakh. Then entire thing is wrong. I don't know. They have typed. Okay, we'll make it now. Yeah. 43 lakh 20,000. And then, so what is the cost of, so guys, first of all, cost of acquisition, what? The cost, sorry, the selling price or FMB, whichever is higher, correct? So, first, what is the cost of acquisition? We did that very clearly. The FMB or cost, sorry, or selling price, whichever is higher. Tell me what will be the FMB of those bonus shares? What will be FMB of bonus shares? 1000 into how many shares? 100 shares. Will you do it separately or will you do it for everything? It's better to, if you do it separately also, if you do it, it's better. Let's do it separately only. Guys, bonus separate, this separate. First of all, guys, what is the full value of consideration? First one, let's do normal shares. Second one, let's do bonus share. One by one, I'm doing. Normal, how many, guys? 1200 into how much? 1400. Bonus 100 into 1400. This is how much? 8 lakh 80. Less cost of acquisition. One by one for bonus or not. For bonus, what will I take? FMB or selling price, whichever is higher. Tell me, sir, whichever is less. Which is the FMB, guys? 2000 into how many shares? 600. Then selling price. Selling price here only. Much? No, full amount. So that only, no. 14 lakh. Tell me, this or this, whichever is less. Then 12 lakh compared with cost. This 12 lakh should be compared with cost. What is the cost? Whichever is high, so 12 lakh. So in the exam, you can just write FVOC figures, cost of acquisition figures, and for everything you can say note 1, note 2, note 3, and you can make a separate working note, make it clear. It will be easier and nicer. So here you can just write the final figure. Tell me what's the cost of acquisition then for bonus? 12 lakh. And you can say check note number 1, note number 2, like that. And in the note you can write whatever we did now. In the note, what will you write? FMB or selling price, whichever is less, and that amount and this thing cost, whichever is high. Right? Now for normal shares, tell me guys. First of all, normal shares I should take FMB as on 2001 or cost, whichever is high, and then I can take the bonus one. So cost of acquisition I need, selling price I need, FMB as on 31/1/2018 I need. Correct, no? For cost, what will I do? Actual cost of acquisition or FMB as on 1/4/2001, whichever is higher I should take. Yes or no? Did you agree for this? Tell me guys, what is the cost of acquisition? That also they have given, see, 130 rupees per share. But market value on 1/4/2001 was 900 rupees per share. So it is cost of acquisition is how much? 1200 into 130. FMV is 1200 into 900. How much? How much? Higher. And what is the selling price, guys? Calculated, no? Much? No. 2,400. How many shares? 1,200. Where have you written? Already done. 8 lakh. Same thing I'm writing, no? Now tell me, FMV as on 2018. 1,000. First I should do selling price or FMV. Whichever is. Yes. 24 lakh or cost of acquisition. Whichever is high. So answer is 24 lakh. I can blindly write the answer and then say note number 2. Ending note number 2. Answer. What is the difference? Each one you should do. Normal 28 lakh 80 minus 24 lakh is. So what is the sale consideration? 4 lakh 80 plus 2 lakh 40. Correct? 4 lakh 80 plus 2 lakh 40. 4 lakh. Gain. On that, what is the percentage I'll put? Long term or short term? Long term. Answer is 7 lakh 20. Answer is correct, but method is little bit. But we can write it note 1, note 2. Just write the main answer. Just write note 1, note. What have they asked? To calculate the capital gains, or they've asked me to calculate the tax? Capital. What is capital gain? 7 lakh 20,000. Got it? So, TP, previous year's paper. Examine the taxability of capital gains in the following scenarios for the assessment year 25-26. Determine the taxable amount and rate of tax applicable. On 28th December 2024, 5,000 shares of AB Limited listed company are sold by Mr. Dinesh at 500 rupees per share, and STT was paid at the time of sale of shares. These shares are acquired by him on 5th June 2017 at 425 per share by paying STT at the time of purchase. On 31st January, the shares were traded on recognized stock exchange at 450 rupees. Tell me, guys. Tell me the same calculation you should do. You should tell me the cost of acquisition. What I should take? Original cost of acquisition, selling price, FMV. Selling price or FMV, whichever is less, this and this, whichever is high. Tell me. Tell me the answer. Solve and tell me. Come on, right now. Now you know how to do. Just question number 1 only you solve. Second one don't want. First one only you solve. Right here only you solve and tell me. You can take the FMV only directly. Don't multiply by shares. You can take the FMV only. What is the selling price, guys? 500. Acquisition price how much? 425. 31st March, how much was it? 450. So it is 500 or 450, whichever is less. 500 or 450, whichever is less. Which is less? 450. 450 or cost, whichever is high. 450 or cost. What is the cost? 425. Whichever is high, 450. So what is the cost? 450. That's all. That you should write as the note, then directly tell the answer. So what is the calculation you see? Long term, full value of consideration, 5,000 shares into 500, 25 lakh. And finally, it will be how much? 5,000 shares into 450. That will be my cost. So long-term capital gain, 2,50,000 rupees. What will be the taxation? Up to 1,25,000, no tax. Remaining 1,25,000, 12.5% tax. That is, they have not, have they asked to calculate the tax? Examine the taxability, determine the taxable amount and rate of tax. They are not asking you to tell me the tax amount. When they are not asked, don't do. You write the answer 2,50,000 rupees. Then they should ask you that, are asking you how to determine tax. So what will you say? For long-term capital gain exceeding 1.25 lakhs. That is, for 1.25 lakhs, what would be the tax, guys? 12.5%. For 1.25 lakh, nil. For the remaining 1.25 lakh, how much? 12.5%. Correct? Next. Mr. Satish is the owner of the residential house which was purchased on 1st July 2017 for 10,50,000. What is the cost of acquisition? 10,50,000. He sold the said house on 14th October 24 for 25 lakh. 14th October 24. It's after 23rd July and it's an individual and a residential house. So two options. Take indexation and do 20%. Don't do indexation, 12.5%. Valuation as per the stamp authority is 45 lakhs. He invested 50 lakhs, 15 lakhs in bonds before EC bonds. Tell me, guys. Without indexation, what will it be? Guys, selling price 25 lakh. Valuation is how much? 45 lakh. Is SDV greater than 110% of selling price? Yes. So FVOC is equal to SDV. Are you understanding this? SDV is greater than 110% of selling price. SDV is 45 lakh. Greater than 110% of how much? 25 lakh. What is 110% of 25 lakh? 27 lakh 50,000. Is 45 lakh more than 27 lakh 50,000? Yes. So FVOC is equal to 45 lakh. So first option without indexation. 45 lakh minus 10 lakh 50,000. How much? 34 lakh 50,000. But in that, they have invested in RECL bonds to the tune of 15 lakh. One is very simple, guys. 45 lakh minus 10 lakh 50,000. Balance 34 lakh 50,000. This is invested in RECL bonds minus 15 lakh. 19,50,000 is in REC, sorry, is the capital gain. On this, what's the percentage? 30%, guys. No indexation, no. Did you do any indexation? No. 12.5%. Don't do mistakes like that. 12.5%. 19 lakh 15, 12.5, how much? 2 lakh 7, 2 lakh 43, 750. Now with indexation we have to do 25 lakh, sorry, 10 lakh 50,000 into 363 by, tell me the indexation. They have given 17, 18 indexation is 272. So tell me the cost. 10 lakh 50 into 363. Much? 14 lakh 1,287. What is the selling price? 45 lakh. What is the index cost of acquisition? 14 lakh 1,287. What is 45 lakh minus 14 lakh 1,287? 30 lakh 730. In this rural electrification bond, I have to subtract 15 lakh. How much? 15 lakh? 15 lakh 98,713 into 20%. 3 lakh 19,000. See guys, with indexation I am getting 3 lakh 19,000. Without indexation I am getting 2 lakh 43. Which is better? Without indexation. Do you understand? Take 2 minutes, go through the answer. Same is given. This year, thankfully, it's correct. Read with indexation, without. Read, please. Check out, read 2 minutes. Question number 7. Mr. Dattatreya, resident individual, aged 58 years, sells listed shares in a private sector company 2004. Before or after? Before 23rd July, after 23rd July? Before. So old rates will come. Keep that chart handy. Shares were bought on 1/8/2012 for consideration of 2 lakh. The Dattatreya paid 2,000 as brokerage on sale. Deposited 5 lakh in capital gain account scheme. 15,625 before filing the return. No problem. On April 30th, 2026, he withdraws 4 lakh 50 and purchases a residential house property at Delhi for 4 lakh 50,000. CII. Ascertain the capital gain chargeable to tax. Tax treatment of the unutilized amount. This is selling an other than a residential house and buying a residential house. Which exemption? 54F will come. 54F. In 54F, capital gain is exempt based on capital gain invested or based on net consideration invested. Net consideration invested. This will be that calculation. That's all. So you see, net sale consideration is how much? 10 lakh. Correct? Minus 2 lakh. Sorry, how much is the 2,000 brokerage? 10 lakh minus 2,000. So 9 lakh 98,000. And obviously, since it is before 23rd July, indexation will be applicable. Yes or no? Yes. So indexation is how much, guys? Cost of acquisition is how much? 2 lakh rupees into 363 by 200. Everybody with me? 363 by 200. That will be how much cost of acquisition? 3 lakh 63. So ultimately it is 6 lakh 35,000. Guys, if 6 lakh 35,000 is invested, if what is the net consideration? 9 lakh 98. If 9 lakh 98,000 is invested, I am going to get a discount, capital gain of exemption of 6 lakh 35,000. How much is exempted? How much has he deposited? Sorry. 5 lakh only has deposited. No, yes or no? So since he has deposited 5 lakh only, how much is the exemption is the question. So 5 lakh into 6 lakh 35 by 9 lakh 98. Understood? Yes. So 3 lakh 18 136 will be exempt and 3 lakh 16 867 will be exempt. Sorry, taxable. Be taxable. What is exempt? 3 lakh 18,136 is exempt. 3 lakh 16,867 is. This is 54F calculation. Examiner is telling 90% of the students have written here 5 lakh. And made how much taxable? 1,35,000. 100% wrong. Yes or no? It is not the amount deposited. What is exempt? Net consideration. Proportionate net consideration. That is only exempt. This is a common mistake in 54F. If the question was selling a house, buying a house, then 5 lakh you will take. This selling house, buying a house? No, it is selling unlisted shares and then buying a house. So what will you subtract? Net consideration, proportionate you should do. Unutilized amount, yes. Tax treatment of unutilized. The unutilized amount shall be chargeable to tax on a proportionate basis. The expiry of 3 years. When will the 3 years apply? 16/5/2027. Proportional capital gain will be taxed. Amount of capital gain will be how much, guys? 3,16,867. That will be the capital gain chargeable to tax. 30,000 rupees. How is it? 4,50,000, no? 4,50,000 is only utilized here. 4,50,000 only is utilized. Remaining is not utilized. How much is not utilized? Amount of capital gains for the assessment year 2028-29 will be 30,541. How did I get 30,541? Because I have utilized 4,50,000. Out of 6,35,000 and 9,98,000, I have utilized 4,50,000, which means the remaining I have not utilized. Or no? So unutilized portion I should tax. So 3,16,864. 3,16,864 was my chargeable to tax. That I'll subtract the utilized amount. How much is utilized amount? Very simple, guys. So if 9,98,000 has been invested, 6,35,000 will be exempt. But how much is utilized now? 4,50,000 only is utilized. So what will be the exemption? 2,86,323 will be the exemption. Previously, how much exemption? I mean, how much capital gains? This should be basically this is utilized. So this will be the exemption. So out of the what amount which is remaining, that is 3,16,864, should subtract this utilized amount. So the balance will be unutilized portion which is taxable. What is the taxable portion? 30,541. 30,541. Understood, guys? Sir Ishwar purchased 100 equity shares of Messrs Good Money Company on 1/4/2007 at the rate of 1000 rupees per share in public issue by paying STT. Cost of acquisition will be 100 into 1000. Company allotted bonus shares 1:1 on 1/12/23. Also received dividend of 10 rupees per share by 24. He has sold all the shares at 4000 rupees per share, which has STT as well as brokerage. It is already paid, so you don't have to take it. Brokerage you have to take. Compute the total income. Gross sale consideration 100 into 4000, 4 lakh. Less brokerage 1%. Net sale consideration lakh 96. Cost of acquisition is how much? 100,000 into 100 rupees into 100,000 rupees. Cost of acquisition of equity shares acquired before 1/2/2018. Did you acquire this? 1/4/2007. They have given here, you see, 31/12/2018. FMB as on 31/1. FMB as on 31/1/2018. How much? 2000 rupees. So what will be the cost? 1000 into 100. So same guys. Selling price or FMB, whichever is less. What is selling price? 4000. 4000 or 2000, whichever is less, 2000. 2000 or cost, whichever is high. What is the cost? What is the cost? 1000. Cost 1000. We purchased it in 2007. No, cost is 1000. Then the other part was 2000. 1000 or 2000, whichever is high. Which is high? 2000. So you should take. So here 2000 into 100, 2 lakh. For that I should write a note. So 3,96,000 minus 2 lakh is how much? 1,96,000. This is a long-term gain. Bonus unfortunately will be short-term. Why? They issued bonus on 1/5/24. They sold all the shares on 1/10/24. Less than 1 year. Short-term or long-term? Short-term. Bonus shares. 1000 into 4000, 4 lakh. Less brokerage, yes. Net consideration 3,39,000. Cost of acquisition will always be nil. Correct? 3,09,000. And this thing, what do you say? Cost of acquisition of bonus shares will be nil. Why? Because it was issued only when? Will you take FMB benefit 31/1/18? No, it was issued only in 24. So cost of acquisition will be what? Nil. 3,96,000. Dividend is separate. So you see, for short-term capital gain of 3,96,000, what is the rate now as per the new law? 20%. When was it sold, guys? After 23rd July, before 23rd July? 1st October 2024 is after 23rd July 2024. What is the tax rate for 20%, right? It was 15 before, now it is 20. So for short-term capital gain at 111A, you should take 20% of 3,96,079,200. For long-term capital gain, it is 1,96,000. So 1,96,000 minus 1,25,000 into 12.5%. Everybody with me? Yes. So it is 1,96,000 minus 1,25,000. It is 8875. Total is this amount for capital gain. Total income is 13,94,000. Dividend is also there, leave it. So for balance amount, it will be taxed as per other thing. For capital gain, separate taxation. balance amount separate taxation. As per what rate? Slab rate. So balance income is 8 lakh or something. Yes, balance income is 8 lakh. So the exemption, basic exemption limit will be exhausted there only. 8 lakh 2000 if you do under the new regime, old regime, whatever. They have given new regime or old regime. Assuming he has pays tax under default tax regime. Default tax regime means new regime. Up to 3 lakh nil, 3 lakh to 7 lakh, 7 lakh to 10 lakh, that one. So for 8 lakh 2000, what is the tax? 3 lakh to 7 lakh 5%, 7 lakh to 8 lakh 2000 10%. Correct? Done? One. Solve question number 9. MTP 4 marks, October 23. Solve. Try. It's a house, which means you should do both without indexation, with index. Solve and tell me the answer. Don't look at the answer. Please try on your own, guys. Then there's no point if you see the answer. Anyway, question is on the screen only. I'll keep it like that. Read, solve, and then compare. Yes, guys, tell me. So, Gagan has a residential property acquired for 2 lakhs. Okay, cost of acquisition. Property sold for 22 lakh. So, this is what? Sale value. But according to value, the SDV is 28 lakh. I am not agreeing. I am telling no, it's 22 lakh only. So, I will go to the valuation officer. If valuation officer had made it 30 lakh, then I should take 28 lakh only. If valuation officer makes it 20 lakh, which is less than 22 lakh, I will take 22 lakh only. If the valuation officer does anything between 22 and 28, then I should take that amount. Valuation officer has made it 25 lakh. So, valuation officer has made it how much? 25 lakh. And according, this is the SDV is telling, and according, and my consideration is 22 lakh. Now I should try that other rule also. SDV should be greater than 110% of consideration. What is consideration? 22 lakh. What is 110%? 22 lakh plus 2 lakh 20, 24 lakh 20,000. Is 25 lakh more than 24 lakh 20,000? Yes. So what is my FVOC? And SDV, sorry, how much is it? SDV is equal to FVOC. How much? 25 lakh. So I should take my FVOC as 25 lakh first. For this, I should write whatever I told you, you should write as a note. That full note is given here, you can go through. Index cost of, first I should take with indexation. With indexation, 2 lakh into 363 by 117. 6 lakh 20,000. So overall capital gain is 18 lakh 79,487. But they have purchased one more house within how many years you should purchase? 1 year before or 2 years after you should purchase, or within 3 years you should construct. Here they have bought within how many days? Within 2 years only they have purchased. So 17 lakh. Yes, so taxable long-term capital gain 1,79,487 into 20% is 35,897. If without indexation is very easy, 25 lakh is same cost of acquisition. I will directly take how much I purchased for. I purchased it for 2 lakh. This should be 2 lakh here. So if it is 2 lakh, 23 lakh. Less exemption, same 17 lakh. Taxable capital gain, long-term gain 6 lakh into 12.5%. You did 20%. See, gone. Those kind of mistakes cannot do. 6 lakh into 12.5%, 75,000. And now what they're saying, guys, this house also, they sold it off within 3 years should be the lock-in period. They sold off immediately. Short-term capital gain will come and cost of acquisition will be subtracted by the exemption already claimed. What is the new asset value? 17 lakh. What is the exemption claimed? 18,79,487. The first case. Sorry, where is the exemption? 17 lakh. 17 lakh is the exemption. Gone. That exemption will go. Right? So basically cost of acquisition will be nil. 30,000 minus 30, not 30,000. How much they sold it for, guys? 30 lakh. 30 lakh minus nil. $30 lakh minus is 30 lakh. That's all. Right? Yeah, that is obvious. No, why 12.5? Short-term capital gain, how much? Why 20? Is it shares? Come on, guys, don't make your own law. Short-term capital gain. Is it 112A, 111A? No. See the chart. Normal case. Short-term capital gain. What rate? Slab rate. This slab rate. 20% is only for 3 items. Equity shares, equity oriented units, units of business trust on which STT is paid. Should not take 20% for others. For others, how much? Slab rate. Everyone with me? Understood? Yes. Should not get confused here. Don't try 20% and lose marks. Next. See question number 10. Let's see. That's all, guys. Everything else is similar only. This one will do and done. Everything is same, similar questions. And concept capsule we have done around 5-6 already. That same thing has been given here. You can check out. For example, remember we did one thing. 20 unit flats were there. That 15 flats, 5 flats. That 500 rupees question that is there in this. And one more we solved. Remember on 1st August one value was given. 1st June one value was given. That FMB. That SDV was on different dates. First was agreement for sale date. One more was possession date. One more was that question is also there. Many questions what I have done is repeated. But I am just doing the new ones. Very easy, guys. Nothing is there. You just need to know which rate to put. This is a question on 31/1/2018. Highest rate. You see. I told you, no, they'll confuse you by giving highest rate, average rate, lowest rate. What will you take? You will suddenly remember average TTBR, TTSR I had read somewhere. So TTBR, TTSR is not there, but average is there. So let me write average. That is the problem. TTBR, TTSR is for non-resident. Here we are doing something else. It's always the highest rate, guys. Determine the capital gain or loss on transfer of listed equity shares. STT paid. STT paid. The moment STT is paid, 112A, 111A. 112A is long term, 112A is long term, 111A is short term. And units of equity oriented mutual fund, that's all. Tax payable, yes. Gagan purchased 300 shares on 25/2017 at a cost of 400. Cost of acquisition 400. Sold all the shares on 31st May 24 at 1,200. Before or after? Before. So for before, what will the rates be? Up to 1 lakh exempt long term. After that it is 10%. Short term it is 15%. Unfortunately, you have to remember the rates. After 23rd July, up to 1.25 lakh, nil. Beyond that amount, it is 12.5%. Short term, it is not 15, it is 20%. Got it? That's why the date is very important. You may forget the date of your birthday, the day you went on a date with your imaginary girlfriend, boyfriend, or real boyfriend, girlfriend, whatever. You ignore all those things. For Nirmala auntie's purpose, you should remember 23rd July 2024. Very important date. Next. So this is the cost of acquisition. This is the selling price. Now I need to figure out FMB as on 31/1/18. This is pure knowledge. If you know it is highest, you can, otherwise full confusion. What is highest? 700. Now do the scene. What is that cost? You already know as per section 45. Selling price or FMB, whichever is less. Selling price 1200, FMB 700, whichever is less, 700. Then 700 or 400, whichever is high. No, 700 or what is, okay, cost, correct. 700 or 400, whichever is high. How much? 700. So what is the cost of acquisition? 700. What is the, what do you say? Selling price 1200. So you see, long term capital gain would be 1200 minus 700. Will you get any indexation here? No. No indexation, guys. How many shares are you selling? 300 shares. 1200 minus 700, 300. Long term capital gain. Right? So anyway, which date it is sold? 31st May. So actually you should take the old one. They have taken the new one. It's okay. You take the old one only. Then because it was sold before that date, no. But if you take new one, here they have taken new one. It's okay. Leave it. So what is 1,25,000? Nothing. After that, how much, guys? Wrong. It should be, anyway, we'll do the math. Tell me, how much will it be, guys? 500 into 3 lakh is how much? 1,50,000. Did you get the capital gain of 1,50,000? Yes. So it should be how much? 12.5%. Wrong. So two things, guys. If it is, correct answer is how much? 1,50,000 minus 1 lakh. 50,000 into 10% plus cess. Much? 5,200. Correct. 5,200. This is the correct answer. If it is sold after 23rd July, 1,50,000 minus 1,25,000. 25,000 into 12.5% plus cess. 3,250. This is the correct answer. 1,250. Got it? 1,50,000 minus 1,25,000 is 25,000. 25,000 into 12.5% plus cess of 4%. 3,250. Everyone got it? 3,250. That's all. Second question is there. Mr. Raj purchased 200 units of equity oriented fund. Same thing. At cost of 550 per unit. The units were interesting. Not listed at the time of purchase. Later they were listed on 1/1/2018. Here also, initially unlisted, later listed. Otherwise, you should take the highest price or you should take the NAV value. Guys, if it is listed as on 31/1/2018, you should take NAV or you should take the, what do you say? If it's unlisted, you should take NAV. If it is listed as on 31/1/2018, you should take what? Highest value. Just to confuse, they have given. So what will you take here? NAV or highest value? Highest value. Because on 1/1/2018 only, it's already listed. I should see the date. Which date? 31/1/2018. Hope you understood this. Other things are the same here. No? This was MTP 7 marks, previous year 6 marks. Calculate the amount chargeable to tax under the head capital gain and also calculate tax on such gains for assessment year 25-26 for the following details provided by Mr. Ganesh. Ignore surcharge and Chessa. Yes. Right? Yes. So, sold 10,000 shares of Y Limited on 5/4/24, 650 per share. Y is a listed company. They are acquired by this fellow 100 per share. On 31/1, same thing guys, 300. Same story. FMV or selling price, whichever is yes. What is FMV? 300. What is selling price? 100. FMV or 650, whichever is less, 300. And 300 or cost, 100 is the cost. 300 or 100, whichever is high, 300. So I am selling it at 650. 650 minus 300 into 10,000. Yes or no? 300 into 10,000. 10,000 to 650. Overall 35 lakhs. Correct? Ultimately that much only. Mutual fund. Mutual fund units, you should take the NAV as on 31/1/18. We have already discussed. We have written in the chart. For units, it is NAV as on 31/1/2018. That's easy. Third one you see. Second one, instead of market value, they have given, instead of highest value, they have given NAV. What will you take? NAV. Third question you see. Sold 100 shares of C Limited on 27/9/24 at 200 per share. C Limited is an unlisted company. These shares were issued by the company as bonus shares on 30/9/97. FMV as on 1/4/2001 was 50 per share. What is it? Bonus shares issued before 1/4/2001. FMV cost will be higher. Cost will be 0 or FMV as on 1/4/2001, whichever is higher. Is higher 50. The cost of acquisition as per 1/4/2001, 50. Indexation or what? Now you see listed company. When was it sold? 27/9. Long term or short term? Long term. Will you get indexation? I sold on 27/9/24 after 23rd July. Interesting. When is it sold? Most important to see this date. Remember the date 23rd July. Remember the date 23rd July. They have not given anything on 31st 1 2018, nothing they have given. What will you take? 100 into 200 will be the selling price. Cost 3 rupees. 3 into much? The entire amount will have a long-term capital gain. At what rate? 12.5%. What they have given. Okay, is it 12.5? Again you check, please check. 12.5% will be for listed shares. Is it listed or unlisted? Unlisted short term or long term? Long term. For that, what is it? Is it normal tax rate? Normal slab, is it short term or long term? Long term is normal slab rate. How much is the rate, guys? Much? 0.5%. Yes. So, here, sale consideration minus cost, long term capital gain, come under 112. 12. So for this you see, sale on 5/4/24, you will take 1 lakh or 1,25,000. Exemption, 1 lakh or 1,25,000. 1 lakh. So it is 35 lakh minus 1 lakh, 34 lakh into what percent? 10%. Correct? Tax under 112A will be 10%, 34. This one also, this will anyway be nil. 50 minus 50, nil. For this 100 shares, what will you take? 12.5%. 12 point much? 12 point on much? 1,008. Because it was sold after 23rd July. It was sold after 23rd July. Here, sold after 23rd July. Anything sold after 23rd July, what is the rate? 12.5%. Nothing. It's become very simple now. 20% without I don't want anything. How much is it? 12.5%. Will you do indexation of all these things now? Not needed. Because it is sold after 23rd July only, indexation is not there. If it was sold before 23rd July, then will I give indexation? Yes. The problem, little bit irritation is because unfortunately for your exam, you should remember the date. Next year fellows will enjoy. Though they have to remember, but more they have to remember the new dates, not the old ones. But for you, because it is in your previous year, unfortunately, you have to remember the old rates and the new rates. So it is important. Stay with me on this. That's about it, guys. Over. Remaining you can do on your own. Everything is a similar question only, but you need to solve. Maybe some 10 extra are there, solve it off. 10, 12, in that 3, 4 we have already done. So technically you have some 7, 8 questions. That's it. Similar way, nothing that we have not done, same it will be. Okay, so finish it off. That completes killer chapter. Which one? Capital gain.